Recording in progress.
Good morning, ladies and gentlemen. 1 minute to go. Carolyn. Good morning, ladies and gentlemen. Welcome to our annual general meeting. I am Archibald Campbell, chairman of the JMMB group, and I now call this meeting to order and extend a warm welcome to all shareholders and other stakeholders and those who have joined us virtually. Ladies and gentlemen, I welcome you to the 11th Annual General Meeting for the JMMB Group Limited. A special welcome to shareholders joining us virtually, and I'm happy to see a few familiar faces here at our physical location. Let us stand for the national anthem of Jamaica. Thank you. Please join me in prayers as I ask Director Powell to offer prayers on our behalf.
Let us bow our heads in prayer as we welcome the presence of the Lord. Father in heaven, the gift of life is a privilege from you. And so, because we recognize how important life is, we want to thank you, Lord, for those who were here with us last year and unable to make it again today. We pray, Lord, that their souls may rest in peace and that light perpetual may shine upon them. We thank you for the gift of this new day because it is by your grace. We come before you to thank you, to praise you, and to adore you. We acknowledge and believe in the unconditional love that you have for each of us. We accept that indeed you are the God of love and understand that whoever abides in love abides in God, and that God likewise abides in them. Help us to appreciate that this was the inspiration and vision that you gave to our founder, Joan Duncan, to form JMMB, with an overarching philosophy which embodies your characteristics of love as a governing principle of the way we deliver service and to guide the attitudes and the behaviors we share with team members, clients, and shareholders, especially when we know they have challenges, difficulties, trials, and even sicknesses to go through, Lord. Thank you for the greatness that you have placed in each of us, for the knowledge and understanding to be possibility thinkers, for the wisdom and discernment to be greatness achievers, and the courage to live up to the commitments with dignity and integrity. All these good gifts come from you. You have promised that if we call on you, you will always answer. Today we ask you that as we strive to please you and all stakeholders, that you will strengthen us to always give of our best, to serve with good intentions, to successfully adapt to the varying cultures that we serve across geographies, to provide transparent solutions and that satisfy the needs of our clients, and that our regional and business diversification and smart growth strategies will reap above average benefits for team members, clients, and shareholders. As an organization striving to be good corporate citizens, we thank you for the manner in which you have blessed the work of the Joan Duncan Foundation as a path to nation building and people empowerment, for the gift of a CEO that provides bold leadership to this blessed organization and who helps to strengthen its image by being a leader who is respected and called upon to help to keep the Jamaican economy on track through organizations and projects such as the Economic Oversight Committee, the work of the PSLJ, and its leadership role in Project STAR. We thank you that you have chosen JMMB as an organization built on love through which to influence society in this general and meaningful way. So today, Lord, we're here by your grace as directors, managers, and team members, with humility to share our plans and strategies, to listen to our stakeholders, and to respond in a manner that pleases you. So please, Lord, place your hand on the shoulders of our chairman, Archibald, today, that he will guide the AGM to successfully achieve the purpose for which it has been called. And in the end, Lord, when we leave this place, that we will continue to build strong supporting relationships based on love, to sustain the success of this organization, maintain the legacy of our founder, Joan Duncan, and always worthy of your having meticulously created us in your image and likeness, so that we can always strive to be like you. In Jesus' name we pray. Amen.
Thanks, Deacon Powell. I know he'll challenge a certain reverend I see in his Jamaica shirt for prayer to do a prayer. Next time we'll call on you, not because you're in your Jamaica shirt, we could very well call on you next time. Okay. I know that Director Powell actually mentioned those who have passed, but as soon as we are all seated. I see a few people standing. I'll ask for a moment's silence for clients, shareholders, friends, and family who have lost during the year. We'll start now. Lord, eternal rest grant unto them, and let perpetual light shine upon them. May their souls rest in peace. Amen. Okay, we'll now have our three CEOs for the banks to actually read a section of the Vision of Love. And we'll start with Mr. Sean Moses, the CEO of JMMB Bank, Trinidad and Tobago. Mr. Moses.
The atmosphere that JMMB is in the process of developing may be defined as an energy field where overlapping circles of creativity, passion, excitement, fun, and laughter coexist in a dynamic process that ultimately leads to higher and higher levels of self-actualization, hence the achievement of the organizational mission. This is a loving, caring, and honest atmosphere where ideas are valued and shared openly, where a balance is created between aspirations and practical aspects of work and life, between actualization and potential. There's no fear, no limitations, no boundaries.
I now call on Mr. Paul Gray, who is standing in for Mr. Jerome Smalling.
Team members therefore envision JMMB as the premier financial institution of its kind, successfully, professionally managed with excellent team members, giving exceptional client care and striving to achieve excellence in all areas of life. Team members see JMMB continuing to expand beyond Jamaica, retaining its spiritual characteristics and therefore developing all the disciplines required for its continued success.
Thanks, Paul. And now we'll have Mr. Louis Bogart, CEO of the JMMB Bank, Dominican Republic.
I believe so strongly in myself that I will not get defensive by criticism, as I know that every experience is an opportunity for growth. I will nurture and build my fellow team players. I will use every opportunity to praise and give thanks. I embrace the uncertainty that forms part of my vision. I have a strong enough faith to know that everything that happens along my path happens for a reason, and that all things work together for my good.
Thanks, Louis. And having gone through the preliminaries, I now call on our Corporate Secretary, Ms. Carolyn Da Costa, to read the notice convening the meeting.
Good morning. Notice is hereby given that the 11th Annual General Meeting of JMMB Group Limited, the company, will be held on Monday, September 23, 2024 at 10 a.m. Jamaica time in a hybrid format. One, at the Jamaica Pegasus Hotel Kingston, located at 81 Knutsford Boulevard, Kingston 5, Jamaica, for attendance in person, and two, via electronic means, in accordance with the provisions of the Companies Act of Jamaica 2004, as amended, to consider and, if thought fit, pass the following resolutions. Resolution 1, that the reports of the directors and the auditors and the audited accounts for the year ended March 31, 2024, circulated with the notice convening the meeting, be and are hereby adopted. Resolution 2, that the interim dividends of 25 cents paid on October 9, 2023, and 25 cents paid on October 12, 2024, making a total of 50 cents for the year under review, be and are hereby ratified and declare as final, and that no further dividend be paid in respect of the year under review. Resolution 3. The directors retiring from office by rotation pursuant to Article 105 of the company's Articles of Incorporation are Dr. Archibald Campbell, Mr. Andrew Cockin, Mrs. Donna Duncan Scott, and Mr. Dennis Harris, all of whom, being eligible, offer themselves for re-election. To consider, and if thought fit, pass the following resolutions: that Dr. Archibald Campbell be and is hereby re-elected a director of the company, that Mr. Andrew Cockin be and is hereby re-elected a director of the company, that Mrs. Donna Duncan Scott be and is hereby re-elected a director of the company, and that Mr. Dennis Harris be and is hereby re-elected a director of the company. Resolution 4, in accordance with Article 108 of the Articles of Incorporation, the following director, having been appointed during the year, retires and is eligible for re-election. That Director Nerisha Davis Farquharson, having been appointed during the year, be and is hereby elected a director of the company. Resolution 5, that KPMG Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the end of the next annual general meeting at a remuneration to be fixed by the directors of the company. And Resolution 6, that the amount included in the audited accounts of the company for the year ended March 31, 2024, as remuneration for their services as directors, be and is hereby approved. Dated this 24th day of July 2024 by the order of the board. Thank you.
Thank you, Carolyn. I take this opportunity to introduce to you the members of the board, those who are here with us, and I will let you know the two that are joining by remotely. On my immediate left, we have Mr. Wayne Powell, Mrs. Donna Duncan Scott, and Mr. Dennis Harris. I like to do all of the leftists first. Behind those, we have Mrs. Patricia Daly Smith, Mrs. Audrey Wells, Mr. Leighton McKnight, and Dr. Ann Craig. To my right, on the second row, we have Mrs. Nerisha Davis Farquharson, Mr. Andrew Cockin, Mrs. Audrey Dear Williams, and Mr. Wayne Sutherland. In the front row to my right, you have our CEO, Mr. Keith Duncan, and our corporate secretary, Mrs. Carolyn Da Costa. Online, we have Mr. Reese Kong, who was stranded, couldn't get a flight in, and Mr. Andrew White, similarly unavailable because he's overseas. Thank you. Just to go through some administrative matters, and I'll speak of the meeting protocols. Person joining us online may send questions to agm_questions@jmmb.com. Let me repeat. Persons joining us online may send questions to all lowercase, I should say. You can't have lower caps. All lowercase, agm_questions@jmmb.com. Questions sent prior to the meeting. For those questions sent in prior to the meeting, and which relate to the business under consideration at the meeting, we will address them during the question and answer session. In the event that they are not addressed in the meeting by the end of the allotted time of the meeting, we will respond to you via email within 3 working days after the AGM. Questions from shareholders present. You may raise your hand, and when acknowledged, you may ask your question. In an attempt to make this AGM as succinct as possible, we ask that you limit your questions to a maximum of 2. We will endeavor to end by 2 p.m. Hence, we need to use our time efficiently. If time permits, you may ask additional questions. Members whose votes were already cast via proxy will not vote. Only those members who have not yet voted shall vote electronically at that time. We will permit a 30-second period after each resolution is tabled to facilitate the voting process for the remaining members who are voting at the time. Only ordinary shareholders are permitted to vote in the AGM. Shareholders joining in person will vote via a raise of hand. All voting, we will count your votes and add to the votes on the virtual platform to get the final count of the votes and present the results. Minutes of last year's AGM. I also take the opportunity to inform you that the share register and articles of incorporation are available for inspection by the members. Copies of the minutes of the annual general meeting held last year is also available should you require a copy. We now move to the auditor's report, and I ask Mrs. Karen Ragbur Singh of KPMG to read the auditor's report to the members. Mrs. Ragbur Singh.
Good morning, everyone. Independent Auditor's Report to the members of JMMB Group Limited. Report on the audit of the financial statements. Opinion. We have audited the separate financial statements of JMMB Group Limited, the company, and the consolidated financial statements of the company and its subsidiaries, the group, set out on pages 9 to 123, which comprise the group's and the company's statement of financial position as at 31 March 2024, the group's profit or loss, the group's and the company's statements of profit or loss and other comprehensive income, changes in stockholders' equity and cash flows for the year then ended, and notes comprising material accounting policies and other explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the group and the company as at 31 March 2024, and of the group's and the company's financial performance and cash flows for the year then ended in accordance with IFRS accounting standards as issued by the International Accounting Standards Board, IFRS Accounting Standards, and the Jamaican Companies Act. Basis for opinion. We conducted our audit in accordance with international standards on auditing. Our responsibility under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report. We are independent of the group and the company in accordance with the International Ethics Standard Board for Accountants International Code of Ethics for Professional Accountants, including International Independent Standards, ISBA Code, and we have fulfilled our other ethical responsibilities in accordance with the ISBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Page 2, key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the financial statements of the current period. These matters were addressed in the context of the audit of the financial statement as a whole, and informing our opinion thereon, and we do not provide a separate opinion on these matters. 1. Fair value of investments. A significant portion of the group's investment securities were measured at fair value and are instruments for which quoted prices are not available. The valuation of these investments, although based on mainly observable market inputs, requires significant estimation. The group used valuation techniques which involve inputs such as market yields obtained from established yield curves, which are impacted by uncertainty of market factors. Though market conditions have improved since the onset of the COVID-19 pandemic, there has been continued volatility of prices in various markets, which has increased estimation risk for yields and prices used in determining fair values. How these matters was addressed in our audit. Our procedures in this area included in the main the following: assessing and testing the design and operating effectiveness of the group's controls over the determination and computation of fair values, evaluating the reasonableness of yields or prices by comparison to independent third-party sources, involving our own valuation specialists to assist us to determine or obtain yields or prices of specific securities, and comparing these yield or prices to those used by the group, and assessing the adequacy of the disclosures surrounding the key judgments and estimation uncertainty included in the financial statements. Page 3, second key audit matter, measurement of expected credit losses on financial assets. The group recognizes expected credit losses, ECL, on the financial assets, the determination of which is highly subjective and requires the group to make significant judgments and assumptions. The key areas that require greater management judgment included the determination of significant increase in credit risk, the determination of the probability of default, loss given default, exposures at default, and the application of forward-looking information. How the matter was addressed in our audit. Our procedures in the main in this area included the following: obtaining an understanding of the models used by the group for the calculation of expected credit losses, including governance over the determination of key judgments and assumptions, testing the design and implementation of the controls over the determination of the expected credit losses, testing the completeness and accuracy of the data used in the models to the underlying accounting records on a sample basis, and involving our own financial risk modeling specialists to assist us in evaluating the appropriateness of the group's impairment methodologies, including the SICAR criteria used, independently assessing certain assumptions for probability of default, loss given default, exposure at default, and the incorporation of forward-looking information. Page 4. Continuing on the second key audit matter, significant management judgment and assumptions are also used in determining the appropriate variables and assumptions in the model used to measure the expected credit losses. The use of these judgment and assumptions increases the risk of material misstatement and is therefore an area of increased audit focus. How this was addressed? Our procedures included evaluating the adequacy of the financial statements, disclosures, including disclosures of the key assumptions and the judgments for compliance with IFRS 9. Number 3, impairment assessment of investment in associate. The market capitalization of the group's shareholding in the associated company is below its carrying value, determined using equity accounting. This is considered to be an indicator of impairment for which the group performed a formal impairment assessment. How was this addressed in the audit? Our procedures in this main area included the following: involving our own valuation specialist to assist in evaluating the group's calculation of the recoverable amount of the investment and evaluating the assumptions and methodology used. Comparing the group's assumptions to externally derived data, such as our assessment of the key inputs, including the discount rate. Evaluating the group's assessment of the forecast performance of its investment by comparing projected results with the historical performance, as well as our own assessment based on our knowledge of the industry. Page 5, other information. Management is responsible for the other information. The other information comprises information included in the annual report, but does not include the financial statements and our auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the financial statement does not cover the other information, and we will not express any form of assurance, conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for the preparation of the financial statements that give a true and fair view in accordance with IFRS accounting standards and the Jamaican Companies Act, and for such internal controls as management determines is necessary to enable the preparation of the financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the group and the company's ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management either intends to liquidate the group and the company or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group's financial reporting process. Auditor's responsibilities for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISOs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in the aggregate, they could reasonably be expected to influence the economic decisions of the users taken on the basis of these financial statements. A further description of our responsibilities for the audit or the financial statement is included in the appendix to this auditor's report. The description, which is located at pages 7 to 8, forms part of our auditor's report. Page 6. We have obtained all the information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of the audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records, and the financial statements, which are in agreement therewith, give the information required by the Jamaican Companies Act in the manner required. The engagement partner on the audit resulted in this independent auditor's report is Karen Raghaber Singh, signed by KPMG, Chartered Accountants, Kingston, Jamaica, June 18, 2024. Page 7, appendix to the independent auditor's report. As part of an audit in accordance with ISOs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatements of the financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that's sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. We obtain an understanding of the internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group's and the company's internal control. We evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. We conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events and conditions that may cast significant doubt on the group's and the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group and or the company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the financial statements, including the disclosures and whether the financial statements represent the underlying transactions and events in a manner that achieves fair presentation. We obtain sufficient, appropriate evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and the significant audit findings, including any significant deficiencies in internal control that we identify during our audit. Page 8. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence and communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and, where applicable, related safeguards. From the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report. Unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication.
Thanks, Karen. And by the way, Mr. Staple, I was watching you particularly, when the audit report was being read, you were doing other things. And you are the man cause us trouble. Okay. Ladies and gentlemen, again, thanks, Karen. It is now give me great pleasure to invite our group CEO to give us a vision of the strategies for the group and what happens for the year. But this is a CEO in whom we are well pleased. He, from the company, has been made public. He has been making these presentations from as far back as 2003. And now he was made the CEO after Donna went to have her 2 babies. So Keith has now been our CEO officially since 2005. And it's important to know that through these years, no matter what happens, we have been seeing markets go up, we've seen markets go down, but we have always had a trajectory that is going up. Ladies and gentlemen, Mr. Keith Duncan.
Thank you very much, Chairman, directors, shareholders, team members, good morning. And it's good to be here once again and to be able to give you an account of where we are, how we got here, and where we are going. So thank you all for coming. I hope you'll be patient with me today because I'm going to be very deliberate and to take you through this so everything is properly contextualized. Patience? So good morning again, everybody. Give me a good morning, no? All right, that's better, that's better. Mr. Staple, I never hear you because Archie was just troubling you a while ago, so let me just throw in mine too. Even though CDC mustn't trouble you because next thing you come back rough fun way, you understand? But we're looking forward to the dialogue because transparency, openness is very important to JMMB and who we are. So I'm going to give you a little context in terms of where we are from a strategy perspective. And we have gone through different phases of growth as a JMMB group. Up to 2012, we were primarily an investment house in Jamaica. We had moved into Trinidad with Caribbean money market brokers, which we sold in about 2008, 2009 or 10. And we had 50% holding in intercommercial bank in Trinidad from about 2005, I believe. But we really started our expansion phase in 2012 when we acquired and merged with the Capital and Credit Financial Group, which has paid rich dividends for us and our shareholders, and the Capital and Credit shareholders that are still here with us who continue to contribute, and the Capital and Credit team that came and we have worked together under our guiding philosophy of the vision of love. So Capital and Credit in 2012, then we acquired the other 50% of Intercommercial Bank, rebranded it JMMB Bank in Trinidad. We acquired AIC Investments in Trinidad and Tobago. We rolled out, we bought a commercial bank in DR, Banco Rio, and we started our SAFI, our mutual funds operator, in DR in 2015. So what we were doing is that we were diversifying our business lines across investments, banking, funds management, pension administration, unit trust, etc., to ensure we had a diversified revenue streams so that it reduces your overall risk profile when you have revenue streams from different sources. After those acquisitions and startups, we went into a consolidation phase to try and to streamline our operations through standardization and centralization, and built out our group shared services model. Our next phase was when we started with our pensions administrator in 2017-18, AFP, in the DR, that is a pension administrator, and started to expand and scale up these operations. We then created our new business line, consumer finance, and that was with JMMB Express in Trinidad, which has been doing quite well, with our ROE of about 32% in 2023-2024. Strategic diversification further in 2019 when we acquired our stake of which is now 23% in SFC Sagicor Finance. We also acquired the Bell Bank in the Dominican Republic because we had a savings and loan bank and we wanted a commercial bank. Since then, we have been able to standardize our platform across the three banks. Painful, but we were able to standardize our platform across these three banks. Now, the next phase is more current, and it's over the last 2 to 3 years. And this is around when interest rates started to move up. So in all of this environment, the world was a different place. The monetary policy was more accommodative right up to 2019, right through COVID was very accommodative. So it was conducive to growth. As inflation reared after COVID and after the Russia-Ukraine situation, then monetary policy became tight, liquidity became tight, and capital was at a premium. Capital was scarce because if you remember, JMMB was able to do an APO in 2019, and we actually got about $9 billion, but we actually turned back money. When you move into a more restrictive monetary policy environment, what happens is that liquidity is at a premium, and therefore you don't have access to the capital markets that you once had in a more accommodative monetary policy environment. So therefore we had to manage our growth in a very smart way because we had to preserve our capital and we had to make our capital work harder for us. So we adjusted our strategy to smart growth and consolidation and focused around operational efficiency. We go through a little bit around the period between COVID and to get you up to the current situation. So in COVID, well, everybody know when COVID came in February 2020, nobody knew what was going to happen. The world went into a lockdown, and as the world adjusted, so did interest rates adjust, and interest rates went to near 0%. Where in the US it was 0 to 0.5, and in Jamaica interest rates went down to 0.5%, right? So therefore that's very accommodative, and there was a lot of stimulus that was put in the economy and a lot of liquidity to get the economies back on track. What did that do? It created inflation, and therefore the US Federal Reserve, they all thought it would have been transitory. Inflation would have been transitory. However, inflation persisted. And then that was also, we had Russia-Ukraine, which compounded the situation, and their commodity prices went up and the inflation continued. So basically what you had was interest rates now going up and higher for longer. So we all expected that, that inflation would adjust downwards, but inflation was kind of sticky, and therefore it really impacted globally the world and the financial services and delivery of financial services and the profitability and the capital of financial institutions. So if you look at the Bank of Jamaica policy rates, interest rates were at 2% before COVID, right on the left. Monetary policy was accommodative. At the time, the Bank of Jamaica was, even up to 2019, Bank of Jamaica was trying to stimulate the economy to get growth going in our economy. So therefore, during COVID, rates, they reduced rates, and up to about October 2021, right, interest rates went down to 0.5% in Jamaica, right? The Bank of Jamaica moved quickly in October 2021 and moved interest rates up to 7% in November 2022. So therefore, while interest rates are going up, our cost of funds are increasing, right? So we have to be adjusting our cost of funds to market conditions. Also, you have tight liquidity because the Bank of Jamaica is mopping up liquidity. They're taking liquidity out of the market so that they can reduce demand, so that the domestic demand, so demand does not drive inflation. So they're tightening up the markets like a vice grip almost. And therefore, what is happening then? They use instruments like what they call Bank of Jamaica CDs, where they do auctions. So therefore, interest rates went as high as 13 to 14% on the BOJ auctions, and that is a price where JMMB and other institutions have to price their liabilities, price their products, right? So when you have your yield on your portfolio and you buy Government of Jamaica assets and debt, and your yield on your portfolio is 5 to 6%, and interest rates move on you like this and to 7%, which is the signal rate, and higher in the secondary market, your margins get compressed or eroded or go into negative. So our net interest income would go negative, especially in the investments. In banking, what may happen is because you can adjust your loan, rates on your loans, you can adjust, but we could not adjust at the same pace as the Bank of Jamaica did because we would impact and hurt our clients. We don't want to push our clients into a non-performing where they just can't afford to meet their interest payments. So therefore, we could adjust, but we were very conservative in how we adjusted our loan rates. So therefore, also what happens is the prices on your assets fall. Because when you push up yields in the in instruments, what happens is that the price on the underlying asset falls, and that impacts your capital. And therefore, it reduces your capital, and therefore you have that much less capital. Like I believe our fair value reserve was at 8 billion negative coming into 2023-24 at the end of 2023. That's probably improved now because interest rates have started to move downwards. But that is what happens, and therefore you have to preserve your capital, and that is when preserve your liquidity, and that's when we decided that we had to move into that managed smart growth. The same thing occurred with the Fed. I know all these three graphs, right? The same thing occurred with the Fed, where they were at around 2%, and they went down to 0, and they went up to 5.5%. They moved after the Bank of Jamaica, so they moved in March 2022, right? And they peaked at about 5.25%. But they just last week reduced interest rates, and Jamaica reduced interest rates in August by 25 basis points. The same thing occurred in the Dominican Republic, right? This is what occurred in DR, and the interest rates went as high as 8.5%, even as high as, and cost of funds in that market went as high as 14, 15, 16%. So it basically turned the financial markets upside down. So for those institutions that don't have a cheap deposit base, right, they are more impacted because of the interest rate movements, right? So in delivering smart growth is important because we had to optimize our funding mix. So we recognize that is a very challenging environment and one we had to work through, and it impacted both the banking business line and investment business line with narrower margins. So, in spite of all of that, JMMB was able to deliver $11.8 billion profitability for the year ending 2023-2024 at an ROE of 25%. Notwithstanding a very challenging year, both in Jamaica and the Dominican Republic, right? But we were still able to deliver $11.8 billion return on equity. And what our outlook is with the Bank of Jamaica now reducing rates, the U.S. Federal Reserve reducing rates last week, we expect that this rate cycle is going to continue and interest rates will continue to move downwards. So as I said, the banking and investment business line suffered erosion of margins, our net interest income, and also with tight liquidity conditions becomes FX trading, because there's tight liquidity in the market and tighter margins. FX trading was also impacted. But we learned a lot. We learned lessons from this. But if you look at our results, Jamaica was materially impacted more so than DOMREP and Trinidad. And therefore, our operating profit was negative 345 million when you add up those three countries. Right? When you add in SFC and an impairment which we suffered, we were able to deliver 11.8 billion, and that is a power of diversification. So therefore, in our managed smart growth strategy, the areas we focus on are liability-led strategies. In other words, we have to get a more optimal funding mix. So we must go for the transactional accounts, which are cheaper deposits, where people do their business, current accounts, savings, current accounts, and corporate accounts, so that we have that cheaper base of deposits. And it's something that the board has given us direction on, and we continue to work in that area so that we don't have the high dependence on very volatile funding sources. So therefore, we had to focus on optimizing our funding mix. We also had to ensure that wherever we put our capital, that the capital worked for us. So therefore, there were products and services that we had to then say, okay, now we're going to shift to loans and away from fixed income sovereign debt like GOJs, because the yields on the GOJ were not sufficient to be able to fund at a profit. So therefore, we had to look to reduce our repurchase agreements and products like that and move to loans, deposits, etc., because we're able to get, while narrow spreads, but we're able to get net interest income from on the loan side, and we're able to push on the fund, our funds, our off-balance sheet funds, our unit trusts. We're able to push in that direction also, because they don't use our capital, but they provide fee income for us, right? So that was very important for us in going forward, and we have to also manage our debt, because the cost of debt would have also increased in this period. So we now have to manage our debt, because remember, we use pref shares and we issue notes payables, because to fund growth, you're funding it with debt and equity. That's how we fund growth. So the cost of debt would have increased in this period, and then we know that we now have to manage that. It's called our liability management, manage it very carefully, so we have our eyes on that. We also have to ensure that we get the greatest productivity from our sales force in terms of ensuring that we sell the right products that meet the client needs, but that makes sense for us as shareholders, right? The other areas of focus, as I said, is what we call fee income. And those are fee income in terms of the growth on our managed funds, because you don't earn net interest income, you earn fees. So in all our fund products, we earn fees, and therefore but you don't have to utilize your capital in your fund products, right? We also look at our fee structure, and to ensure that our value-added fees, that we're competitive with markets. So those are value-added services to clients, because we still maintain that we will not charge nuisance fees. It's our fee policy, and we will not do it, right? So, but we had to build out that what we call capital-light fee income. Also, we had to rebalance our portfolio. The government of Jamaica is paying down its debt. I see it when I sit in my EPOC meeting, because it's a fiscal rule of Jamaica that we must get to 60% debt to GDP by 2027-28, and we cannot run a fiscal, Jamaica as a country has to run a positive fiscal balance. So therefore, government of Jamaica debt is coming down, the yields are going to be lower as our credit rating improves, and therefore, and also the government of Jamaica is no longer crowding out the private sector. And therefore, our growth strategy was to grow private credit on and off balance sheet. Loans on balance sheets, corporate issuances off balance sheet in terms of selling to clients and our funds being able to buy higher yielding corporates, right? So that was a very deliberate strategy that we continue to execute, right? And we had to do the portfolio rebalancing in terms of moving away from lower yielding sovereigns to higher yielding corporates, and that strategy is very much underway. One thing we recognize is that in our internal dividend policy, now all the debt and equity that we have pushed down into our subsidiaries in Jamaica, Trinidad, and the Dominican Republic and Barbados, now we have nurtured them, they are getting to a state of maturity, and they now need to start paying dividends up to the JMMB group so we can pay dividends to our shareholders. I think we're getting to that point, and we'll be able to, and we intend to, in our strategy and budget process, work through that internal dividend policy. Right, Mr. Gray? Okay. Another area that we want to look at is, that's very important for shareholders to understand, right, is what we call the asset tax. And it's a distortionary tax for the reason being that it's a tax on assets and not on profits. I just explained to you that on some of our portfolios that we had negative net interest income. All right, and the investment business lines were particularly impacted in the Dominican Republic and Jamaica, and Trinidad also. And in Jamaica, we have to pay this asset tax on even if you don't make profits, right? And that's why it's distortionary. This tax was put in place in 2013 to 2016. This was in a period where there was severe fiscal adjustments to be made, and the government of Jamaica agreed with the IMF that they would put in this asset tax as a temporary measure from 2013 to 16. In 2019, they budgeted for this asset tax to be reduced from 0.25% to 0.125%. So they budgeted to half the asset tax, right? Cut it in half, and then phase it out. We, as in our wisdom, went to Minister Nigel Clark and said, Jamaica, and this was in about March, this was right after COVID had hit, and we said, keep the asset tax. Let us, because there's too much uncertainty out there, we need to give you the fiscal room to manage through COVID. It was agreed, but we didn't put it in writing because we're also caught up in COVID. And it was the Insurance Association of Jamaica, the Bankers Association, and also the security dealers all signed off and gave it back, with the expectation that once the economy recovered and there was fiscal room, that they would now resume the reduction of that asset tax because it distorts our income. Now, let me say, in quarter one, we would have paid $1.14 billion of asset taxes, right? Now, that's in a quarter. You know, this is in a very tight environment. It's a tax on capital also. Not a tax on capital, but it reduces your capital. It reduces your profitability, so it reduces your capital. And it reduces our ability to pay dividends. So our dividends that we paid was $488 million. But we paid an asset tax to the government of Jamaica of $1.14 billion. And this asset tax should have been removed already. So, and who does our dividends go to? Our 12,000 shareholders. And who happens to be in that shareholders? And the National Insurance Fund, which are which is for pensioners, is a shareholder in JMMB. So therefore, pensioners are being hurt, our shareholders are being hurt, because we are paying this asset tax to the government. And we believe enough fiscal room has been created where they need to return to reduce the asset tax and remove it, because it should have been removed from 2016. So this is for something for our shareholders to understand, because what may happen is not politically friendly to say you're going to reduce asset taxes on the financial institutions, because some financial institutions, sometimes people say, boy, they will make billions of dollars and billions of dollars. So, but it is a distortionary tax, and it impacts our business. It impacts the competitiveness of our business and our ability to lend money at rates which are also competitive, because it increases your cost of doing business. In the same way, where we have a regulatory burden, where internationally the capital adequacy ratio is 6%, and in Jamaica it's 10%. And they're looking to increase that, right? And so therefore one has to be very careful between the regulatory burden that is placed on our institutions, which are sound, and also the asset tax, and the government of Jamaica and the Bank of Jamaica now need to look at it in its entirety to ensure that financial intermediation, that we can be competitive and we can deliver products and services and loans to our clients at reasonable rates. But the cost of doing business has to be reduced. Just to say this figure, a total of, since 2013, we have paid $6.5 billion in asset taxes. In terms of diversification, in addition to tax on our profits, and a tax which is at a higher rate, right? 33%. So therefore, yeah. So the cost of doing business is much higher as a financial institution. And there's a lot of capital that's tied up. So when people talk about billions of dollars, there's billions of dollars tied up in capital, and to deliver a ROE of 12 to 13%, we have to be able to utilize our capital very efficiently, and therefore we can't be not giving away our capital in an asset tax or the increased regulatory burden that is placed on financial institutions. And so it's very important. Diversification has worked for us, because while our investment business line took a real hit in this period, the banking business line stood up. And why could it stand up as it did? Because they're able to adjust the loan rates. As I said before, we weren't able to adjust at the same pace. So where the Bank of Jamaica would have adjusted rates up by 650 basis points, 6.5%, we were not able to increase our loan rates to our clients in that same quantum. And therefore, our cost of funds would have increased significantly, and our margins would have narrowed in banking. However, the bank was able to deliver, the banks across the group were able to deliver solid profitability and 67% of operating revenue. In DR, we completed the integration of Bell Bank, and I know we have a JMMB Bank in the DR. Early days yet, still going through some teething pains, but JMMB Bank in Jamaica continues to do very well, and made a profit of $278 million because we suffered an impairment. Trinidad Bank did very well, also contributing to net profit of $841 million. So the banking business line has stood up quite nicely for us. When you look at the countries, as I said, Jamaica was impacted and especially because our investment business line, JMMB investment business line in Jamaica is the largest security dealer in the Caribbean. And therefore, has been our flagship business. And therefore, if you're earning 6% on your portfolio and your cost of funds go up to 7% and above, which is where the ceiling was set, and on the Fed funds to 5.25 to 5.5. And you have to then say you're borrowing money at 8%, 7, 8, 9, 10%. What is happening is that you have a negative spread, and it is essentially impacted the investment business line, and that would have brought down the results of Jamaica, because all the bank would have been profitable, money transfer would have been profitable, insurance brokers would have been profitable, the real estate business line would have delivered profits also. So therefore, all business lines would have contributed to profitability, but the investment business line was specifically impacted. And that is also a part of our smart growth strategy in ensuring that the balance between where we grow assets, whether loans, corporate issuances, and otherwise, and moving away from fixed rate sovereign issuances where we have to fund with short-term liabilities through repurchase agreements. So DR and Trinidad would have delivered. Jamaica would have been impacted because of the investment business line. But then we had the Sagicor Finance Company, which delivered. They had a profit of about $520 million for the year, Sagicor Finance, US dollars. And our share of that, with our 23%, was US $120 million, which we booked at the end of Q3. However, we did have an impairment on a greenfield investment that was made of $12.6 billion, right? That's not something we would like to repeat going forward, and therefore, our investment policy statement has been adjusted to ensure that these greenfield investments, we limit our exposure on these type of investments. Now, it looked good. It looked good, you know what I mean? And the upside looked very healthy, right? And it was rated by CARICRIS as an investment grade, and all the financial institutions across the Caribbean, Jamaica, Trinidad, everywhere, everybody say, let's go, right? And dog damn with supper. However, we're still seeking recovery, okay? So in positioning for growth, so we know that Jamaica was impacted. So we know we had to embark on a plan to really streamline operations in Jamaica. We called it maximizing productivity and profitability. And that was ensuring that we were going to bring down our cost of funds, change up our funding mix to move clients, to encourage clients to open them savings accounts with us, their current accounts through easy access, and to move repos into bank CDs, and to fund the banking operations, because the banking operations is profitable, right? And to build out new products and services in payments, etc. So, and as I spoke about rebalancing the portfolio and moving away from the lower yielding GOG assets to higher quality corporate yielding assets, right? So that was the focus, among other areas for the maximizing productivity, and also operation efficiency, managing that cost-to-income ratio. Because when your revenues disappear, you still have your costs. So that's an area of focus for us, operation efficiency, and bringing that cost-to-income ratio, called our efficiency ratio, in line. That's ongoing work that we're doing, and looking at our staff costs, looking at our other admin expenses, and we would have invested a significant amount of money in capital expenditure to build out the infrastructure for the group expansion, and therefore we have to now pace ourselves to ensure that we can manage it. Smart growth. However, while all this was happening, we were still very much focused around our financial inclusion strategy. And in 2018, we launched JMMB Express. And as I said before, this is JMMB Express in Trinidad and Tobago, and we're expanding this in Trinidad and Tobago. JMMB Express has been able to deliver return on equity of over 30%. So would you put more capital there? I would say yes, right? So that this is how you choose where you allocate your capital, where you're getting a return on equity. So an opportunity came up for a partnership between Liberty Latin America and JMMB. So we're now partners, and we're rolling out this new, and it's in the newspapers, I'm not sure about it, MindLend, right? And it's a fully digital lending experience where you combine alternative credit risk models with new credit risk kind of models, right? And your loans are, it's totally online. You can go online, you can get a loan up to 150,000, and it is disbursed to a fully tokenized, secure Visa digital card. Tokenized means some security thing that they put in, right? So it provides...
Available exclusively by invitation from Flow. Visit mindlend.com for more info.
Thank you. So we're expecting big things. We have to put some money. We have to make an investment. You know, JMB Express, it kind of grew kind of organically, but this one with our partnership with Liberty Flow, we had to make an investment. So therefore, we're expecting to get the returns over time, right? So we don't expect to make a profit in the first year, but we're hoping that this will now move into, we think it will take off. It's innovation at its best, and I think this is going to pay good dividends down the road for shareholders. I'd like to acknowledge the team, though, and it was led by Mrs. Claudine Tracy, who'd put a lot of work in, ensure that, and carried us along with her to ensure that we're able to birth this one. And we're very happy with this. We're going to see where it goes because we can expand this across the region. Barbados is where we were also able to open our offices on March 5th of this year. And we have our security dealer's license to broker, deal, and underwrite. Well, right now we're focused, it's in the early stage of development, and it's a part of our JMMB International. Barbados is JMMB International. And it's a part of our service delivery in Barbados. So it's early days yet, right? We're rolling out the International Access Brokerage and Wealth Management Platform, capital market brokerage, bringing capital market products to the market, because we do have a significant capital market expertise within the group, and we intend to leverage that in Barbados. And there are some deals that are in the pipeline at this point in time. So early days yet for Barbados, but we're looking forward to growth in that market. Not a huge market. The population is 250,000, but we believe we need to be in Barbados. Barbados was able to show growth of 4.4% this year. They recovered from COVID like maybe a year or two behind us, so they are still seeing the COVID bounce, but we will see where the growth rates go from there. And they're on the IMF program, and their debt is around, 110, 100 and somewhere in that region. But they have also a debt reduction and a fiscal rules in place to reduce their debt. JMMB International also holds the such SFC investment, and that's where the funding costs are carried and where the profits are carried from Sagicor Finance in JMMB International. Everybody would note that in the first quarter, if everybody was paying attention, that Sagicor Finance took a hit of a share of profits, negative 1.4 billion. This was due to a negative adjustment in what they call their market experience, mark-to-market assets and liabilities, and this is due to the IFRS 17 reclassification that had to take place, but that this is not something as shareholders we're happy about, because we don't want to see the volatility in our earnings. And therefore, the SFC team would be working assiduously now to ensure that how they manage their portfolio, and this came out of Sagicor USA, is in a manner that reduces the volatility in their profitability. But I am particularly impressed, and I know my chairman is, and and Director Dennis Harris, we all sit on the board, and Patrick Ellis and Julian Mayer, we sit on boards. And I believe this company has a bright future. Right now, they just made an acquisition of Ivari, an insurance company in Canada, and that's where we were able to make that gain of on acquisition, and they're now merging the operations of Sagicor USA and Ivari. We expect, so that is real good diversification. Us, we're the largest shareholder. It's real good diversification for us because we get a share of earnings of Sagicor Jamaica, Sagicor Eastern Caribbean, Trinidad, Tobago, Barbados, and we have Sagicor USA and Sagicor Canada. So therefore, we are very happy, and we are, I would say, bullish about SFC into the future. Our real estate business line is also one that we are very happy with. We are monetizing our land bank because JMMB had built up a land bank, and a number of years ago, about 4 or 5 years ago, we said, okay, let us see how we can put it all together, monetize it, and put some structure around it. And therefore, we were able to bring in the expertise and also put it under the guidance of Mr. Paul Gray, who will continue to manage it. And this real estate business line, we expect will continue to deliver for us. They were able to launch their first project, which was Ligoni. Everybody see Ligoni? And everybody wondering why nobody don't move in yet, right? Well, we're going to put a digital bank on the ground floor, and Pablo can tell you about they're negotiating leases for the floors, 4 floors for the other floors, right? There are a pipeline of projects in place, about 80,000 square feet. We have a multi-story building in New Kingston and renovation expansion in downtown Kingston. So, and there are more projects in the pipeline. We're waiting approval for those two to be able to begin the development. Our SME sector is very important to us because we know in the SME is about 60 to 70% of Jamaica's GDP is driven by small and medium enterprises. So we have to be in that market, and we have to adjust our credit adjudication model because we have to know our client, and we have to look at our compliance, credit adjudication, so we can serve our clients well. This is a huge segment, and we have rolled out our SME Resource Center, and I would say, and our SME unit within the bank, and this segment, we believe, as we fine-tune and go forward, will be very profitable for the JMMB group. Early pains because we have to figure out the credit adjudication model, and people are reticent about taking on a risk. But once you have your risk-adjusted model, then you can price your credit, price your loans and your credits appropriately for the risk. So we have launched our accelerator program in Jamaica and Trinidad. Our powerful woman in business program. So this is an area we always get like the longest in the section because Claudine Tracy loves it, right? So we always have a long piece on SME. Our private equity business line, this is another new area for us, and this is where we take stakes in medium-sized companies, and this one has been in gestation for a little while. It's off the ground now. We have our Vertex SME Holdings Fund, right? And we're able to make acquisitions with this fund. We purchased 25% in Island Car Rentals, and we just acquired 35% stake in Erin Radiology. So, and the management of the private equity will work with the management of the companies, and this is another area of growth. I remember, if we're moving away from GOJ debt because the government of Jamaica don't have that appetite for debt, then we're supposed to grow private credit, private credit and equity. We need to be in this place because this is the future. This is the future for Jamaica in terms of growing private credit, loans, corporate issuances, capital markets, and also deepening the secondary market through securitization, loan sales of private credit, because you're able to build build a book of corporate debt, loans, etc. You can take those packages and you can repackage them and sell the longer end. You can sell to insurance companies, pensions, etc., and keep the short end and sell the short end off. That's called stripping, and that's an area that we're going to be developing as we go forward. I want to thank Paul Gray for the work he did around the loan sale and be able to, really grabbing it by the scruff of the neck and ensure we did our first one at the end of March 2024, and we have more in the pipeline because that's an efficient way how we manage our capital. So in terms of products, JMMB Money Transfer launched the Money Transfer Visa Prepaid Card in July 2023. We see a lot of advertising, so I hope people taking it up. Over 150 countries, so people can get their remittances right onto a card. We have our new JMMB client IPO portal, where even non-clients can participate in IPOs, etc. So you don't have to be a JMMB client. Anybody, I know, and it's a very good digital product. And JMMB is known for delivering that digital experience. So therefore, we expect that as the market starts to improve, because interest rates should start to go down, then there are people who will now start to come to the market to do more IPOs. The long-awaited Moneyline mobile app was launched. Finally, because every year everybody used to come and say, welcome to the mobile app. Oh, it's welcome to it. Well, it's in, and it works well, and I would say it's the best in the market. I want to thank Mr. Gifford for that. Mr. Gifford ranking. Also, the Business Visa debit card, and that is our first card-based solution for business clients, and it really works for SMEs, etc. Well, I think we launched our point of sale, and we're now, which is a big one coming right now, is online onboarding, which you can open your account digitally. So you don't have to go into a branch. You can open your account digitally online. This is another one now, queue management system. So this is how we're able to get daily feedback from the system, what is going on in the branches, what's the wait time, how many clients are in the queue, and it's also a centralized client feedback repository, so clients can give feedback, and the feedback can be organized in a structured way, so we can address it in a structured way, and it's not just people come and talk to you and tell you, boy, this is wrong, that's wrong. We have a vehicle or a system that clients can actually log their issues. Well, the queue management system is expected to reduce wait time. And what we have seen is that in 67% of our branches, or 14 of 21 branches across the group, Jamaica, DR, and Trinidad, we're meeting our service level agreement of having 80% of our clients wait 15 minutes or less, right? Well, we need to move that from 14 branches to 21 branches, right? But that's a great start, and I think it's just we're being in the world of our client. As we go forward to our shareholders, we have to ensure that we are going to pay your dividends. Right, Mr. Ellis? Right? So going forward, we have to manage a business that we can increase our dividends to our shareholders. Our shareholders have been patient, and I think we're able to get up to $1 at one point in time, Chairman Archie, and due to over the past 4 years, in terms of what has happened, the crises across the board, and we have to manage our capital to ensure we have the capital to sustain any shocks, that we had to be very careful with our capital. But we knew that we had to see how we could at least be able to give our shareholder some dividends. And therefore, over the last 2 years, we've been able to 25 cents per share. That's not where we want to be, right? And therefore, we need to increase that, and that is why we have our internal dividend policy now, where the investments that we have made in subsidiaries, now can start to realize dividends, and they can be upstream to JMMB Group, so that we can now, and so that between Jamaica, Trinidad, and DR, and Barbados, and dividends that we receive from Sagicor Finance, that we can pay greater dividends to our clients. So that is a promise, but in terms of increasing dividends over time, we'll be able to give further direction on that and the magnitude of that at another time, right? Because we're going into our planning, our planning process has started. Once again, we have a rolling 5-year forecast that we do in terms of our business, and we have to include a lot of the initiatives that I've spoken about to ensure that we can deliver that return on equity, continue to deliver a return on equity, but also dividends. And we also have to get that share price moving. Not true? Because it's cheap now. It's at $20 right now. $21, sorry. $21 at this point in time. But when you look, right, when you look at what has occurred with you don't have that graph, eh? I don't see it. When you look at the Jamaica Stock Exchange, everybody has been on a downward trajectory, right? And like over the last year, where JMMB stock price would have fallen off by 15%, the market or the composite of financial services fell off by that same amount, or close to that same amount. So therefore, it's not just JMMB. JMMB is moving in sympathy with the rest of the market, right? Now with interest rates now, we're now seen to be on the other end of the interest rate cycle, where interest rates are going to be reduced over time because the Jamaican economy especially is showing great signs of weakness, wherein the government of Jamaica projected for growth of 1.8% for 24-25 fiscal year. And in Q1, which was April through June, the PIOJ projects 0.1% growth. Therefore, we are behind target, and that's going to impact tax revenues, that's going to impact a lot the economic program of the government, right? And therefore, we have to stimulate the economy. Plus, we have the impact of burial, where agriculture and other downstream industries would have been impacted, right? The Bank of Jamaica should be moving to stimulate the economy now. So while the Fed moved 50 basis points last week, the Bank of Jamaica needs to be more aggressive if they're going to stimulate the economy, reduce lending rates to the businesses, because what we have seen is loans to businesses reduce over the first 6 months of the year, not in Jamaica, across the banking sector. And especially in the month of June, there was a marked downturn by $17.9 billion of loans issued, $17.9 billion less than what was issued in June of last year. So the Bank of Jamaica, it's in their remit now to do what they can do, right? Because they were very fast on raising interest rates. Let's see how fast they move on reducing interest rates and getting our economy back on track, right? You not agree with that? Call up the radio show them. Call Cliff Hughes. Call Cliff Hughes. All right, call Dean Jackson Miller. Okay. All right. So going forward, as we said, we remain committed to delivering value to our shareholders, and diversification has worked for us. While we're impacted as I have outlined, we were still able, due to diversification, to deliver $11.8 billion of profitability at 25% ROE. This year is another year of adjustment for us. As interest rates come down, our core performances within our countries, Jamaica and DR, should improve going into next year. And we do expect that SFC, Sagicor Financial Corporation, will continue to perform. So we remain committed to you, our shareholders, And we want to continue to unlock value and grow JMMB Group in a very smart way, managing our capital, managing our liquidity, and as we go forward. I'd like to thank the team members of JMMB, because we have asked a lot of them and in this very challenging period. And we have asked them to, as JMMB is, we are not a very static organization. We're a very dynamic organization, and we're always looking at how we change our model of delivery, even to clients like our Financial Life Goal Center, to integrate the product lines and to be able to meet the needs of the client in a very efficient way, but also to increase productivity. And therefore, we're asking a lot of our team, front, middle, and back, to make adjustments. And this is after them to settle down and this is how we're managing what we're doing now. And then we ask them to make this adjustment because this works best for the client, and this works best for the group, and this works best for shareholders. But they have been very patient and get a little miserable sometimes, but that's what you call change management, and we have to work that through, right? And so to the team members, I say, listen, man, let's hunker down, let's deliver, let's continue to put in the work as we go forward. So let me thank also our directors who continue to be our accountability partner. And thank you very much for your guidance. Thank you very much for your support for the JMMB management team. And we look forward to continuing this beautiful relationship. Shareholders, thank you very much.
Thanks, Keith. And we'll get the opportunity to ask him questions later on. I'm now going to ask Jason Jackson, who's a staff member. Jason, where are you? To come and give an appropriate song at this time.
This morning I woke up and I looked in the mirror, and every part of my body was in place. Many people died and never saw this day. So another day I live, I appreciate. Don't wanna ever get too high and mighty, 'cause tomorrow I can fall down on my face. So another day I live, I appreciate. And that puts a smile on my face. Lord, I thank you for sunshine, thank you for rain, thank you for joy, thank you for pain. It's a beautiful day. Isn't it a beautiful day? It's a beautiful day. Don't fuss and fight, let us unite. We've got one life, so let's make it right. It's a beautiful day. It's a beautiful day. So yea, though I walk through the valleys of the shadows of death, I will fear no evil, won't be dismayed. When I see the clock ticking away and things are not in place, everything in life happens for a reason. Disappointment comes with a lesson. It's for me to get wiser. Got to work harder. In the end, it will get better. Thank you for rain. Thank you for joy. Thank you for pain. It's a beautiful day. It's a beautiful day. Don't fuss and fight. Let us unite. We've got one life, so let's make it right. It's a beautiful day. Yeah, it's a beautiful day. If you got life, then give God praise. You may not have much, but you're living day by day. You can have faith and don't want to work, so get up off that seat and put that faith to work. Hey. It's a beautiful day. Can I just stand and do this with me? It's a beautiful day. It's a beautiful day. It's a beautiful day. Thank you for sunshine. Thank you for rain. Clap your hands. Thank you for joy. Thank you for pain. It's a beautiful day. It's a beautiful day. Don't fuss and fight. Let us unite. We've got one life, so let's make it right. It's a beautiful day. It's a beautiful day. It's a beautiful day. It's a beautiful day.
Thanks, Jason. So with all the rain, we noticed that it took some time, but a number of people have now come out, and it's a beautiful day. All right, now we'll get into the figures, and we're going to ask our CFO of how many years now? 16 years, Patrick? You're growing up in the business. Come and take us through your presentation.
Yeah. Morning, everyone. Yeah, it's a beautiful day. I think Keith did an excellent job of setting the context. Thanks, CEO, in terms of outlining the different aspects that happen and the impact to our business during the financial year. The impact to our business from the investment business line, our venture and movement into the banking business line, and creating a diversified portfolio, not just from a product, but also from a country perspective. And I think when one evaluates the value of a JMMB group investment, looking at that diversification is extremely important. So just setting the context for the financial year, we would have reflected net earnings of 11.8 billion. But in that net earnings, you would have seen net operating revenues of 22.5 billion, down 5%. Mainly, we would have seen net interest income of 9.2 billion. And our CEO mentioned the impact on the high interest rate environment, the increase in interest rates from the central bank across the region in terms of mopping up that liquidity. So what would have happened is a repricing of the liability side of our portfolio, especially on the investment side where spreads would have narrowed. So you'd have seen your net interest income reduce somewhat. We would have shifted our focus, our strategic focus, to what we call our smart growth. And therefore, our off-balance sheet products, our funds, our cap markets, you would have seen fees and commission of approximately 3 billion flat. Gains on securities trading would have been impacted somewhat because in a high interest rate environment, you're not going to trade as frequently as you normally do in a normal environment because of that high interest rate. And you would have seen those mark-to-market losses on our balance sheet. So we did have a strong number, 5.9 billion. We're able to take opportunistic trading, especially in the Dominican Republic, and that a strong feature highlighting the diversification strategy of our group. So overall, 11.8 billion, a strong number, which would have shown an overall improvement year over year. We mentioned the shift in terms of our focus as a group. Moving in terms of while your investment business line would have been impacted, we would have looked to grow the other aspects of our revenue streams. Our managed funds, which contributed 2.4 billion, our cap markets, despite the tight liquidity and the high interest rate environment, we're still able to garner 680 million, 263 million in terms of dividend income deriving from our investment in our equities, and 1.7 million from our FX, despite the tight environment. So overall, as our other income, our non-interest income, was actually approximately 33% of our revenue. And this, going forward from a strategic focus, we will be looking to grow in our non-interest income when compared to our NII and our gains and securities trading. Diversification is, you're going to continue to hear that buzzword because it's key. I mean, our CEO mentioned the fact that our investment business line was impacted negatively because of the high interest rate environment. In some cases, the negative spread, but because of that diversification, the JMMB group is still able to deliver strong results. In Jamaica, which has always been our flagship, 12.6 billion in terms of revenue, 4.6 billion or 21% in the Dominican Republic, 6.3 billion or 15% in Trinidad, and 5.9 or 6% in Barbados. So what you see from the group is not only a diversification by product or business line, but regionally as well. And this goes well in terms of bolstering the group for long-term sustainability in terms of earnings. Taking another view in terms of our business line diversification, we would have seen a significant shift into banking, starting from the investment in the Capital and Credit Financial Group. They acquired 100% in Trinidad Bank, and also now having a commercial banking license in the Dominican Republic. You would have seen that shift in banking. So 67% or 14.9 billion of our revenue was derived from our banking and related services, and 31% in terms of financial and related services. And this, what that does is strengthens the group, because while the investment business line, as I mentioned, would have been impacted, you know, the banking provided good core profitability. And going forward as well, we're looking to see even our real estate line and other business line contributing a further 2%. Now, the SFC, Sagicor Financial Company, really boasted our results in the 24 financial year. We now own 23.62%, part of that as a result of the share buyback implemented by SFC during the financial year. Of the 20.3 billion gain, 16.3 billion of that would as a result of the one-off acquisition from Ivory. Our CEO mentioned 520 million US bargain purchase gain resulting from that acquisition, of which 23% of that is ours. But more importantly, when you look at the core earnings, 4 billion of that was all out of core earnings, and they also continue to provide a steady upstream of dividends, which approximately 1 billion for the financial year. So we are pretty happy about it. You know, they continue to move in the right direction and continue to make the necessary shifts for improved profitability. And we look forward to SFC providing additional good core earnings for the group over the financial year. On the expense side or operating efficiency side, I want to take a little time just to explain to our shareholders in terms of what has been happening, our CEO would have mentioned the investment in our digitization, our one core banking platform in terms of Temenos. We're looking to automate and also to centralize. That required investment in terms of capital expenditure, and what we have seen is an increase in our expenses in the short term. We're not where we want to be, but we're going to get there. We're going to get there. So while you would have seen a deterioration in our efficiency ratio, and that is a percentage of your expenses in relation to your revenue. So with your revenue being impacted, especially your net interest income from your high interest rate environment, your other core revenues would not have grown as fast. And so therefore, in the short term, your operating efficiency would have been impacted. Also, in relation to your investment for the long term, in terms of your CapEx, you'd have seen some increases in your depreciation, your increases in your IT costs, your security costs would have increased as well, and hence why you'd have seen that increase in your expenses in the short term. Our long-term approach, we have started our reorganization to be more efficient, our digitization, in onboarding of our clients in a more automated manner, while still maintaining that personal touch. Over time and over this financial year and going forward, we are expecting to see some improvement on our expenses and our efficiencies. On the balance sheet side, and I just want to highlight the fact that on the balance sheet side, where you're seeing the growth in the balance sheet is where we want to grow our core. You're seeing the growth, 12% growth on the loan side of the balance sheet, that's on the banking business line, funded by your customer deposits, because we want to bring in that lower cost of funds into the banking business arm, and therefore improves your spread and your profitability. You have seen somewhat decline on the investment side of your portfolio, which has been our flagship, and also funded by our repos, a decline on your repo. And this is where we want to grow the banking business line, and while still looking for that opportunistic trading on the investment business line, but what you'll see is a slowing in terms of growth on the investment business line as we focus into more of non-interest income line of business and also focus on the banking side of our business. From a capital perspective, our capital remains solid, 54.7 billion at the end of the financial year, March 24. You would have seen, as disclosed in our financial statements as well, all our regulated entities, because we're a highly regulated entity, falling under the financial holding company, regulated by the central bank and also the Financial Services Commission. All our regulated entities within the group met and actually exceeded their capital requirements. So that is something we are proud of, having that solid base where we can grow and continue to move forward. So what did our quarter results look like? Our quarter results, our CEO had mentioned we had a loss in the quarter. He mentioned the fact that our NII would have been impacted as a result of the high interest rate environment. However, the big ticket item coming out of our Q1 would have been the fact that SFC would have made a loss arising from the mark-to-market of their assets and liabilities. That mark-to-market, for example, would have resulted in that 1.4 billion loss. However, that one-off of that was approximately 2.4 billion. And that has to do with the IFRS 17 in terms of valuing your assets and liabilities, matching your income streams with your long-term obligation. What we are pleased about, however, is that when you look at the core activities within the entity, they actually had 25 million in terms of US, in terms of core profits, which approximately 930 million for us. So overall, I know that's something that we expect them to work through, and we don't expect that to reoccur. We would also have been impacted in Q1 by the asset tax, 1.14 billion, as our CEO so aptly highlighted. And that is a cost that we incurred before even earning a dollar, right? So we had to take all of that in our Q1. And with the impact on our NII overall, we made a loss. We're able to mitigate that somewhat with some one-off gains. We still had 1.26 billion in terms of our non-interest revenue, gains on securities of 1.3. And so overall, I would say a good creditable performance, if not impacted by the one-off from SFC. On the asset side of our balance sheet, just before I wrap up, I just want to share, fellow stakeholders, that we continue to grow on the core side of our business. And this is something I want us to focus on. On the loan side of our balance sheet, we continue to build the loan side of our balance sheet, the growth on the banking side, 205 billion at the end of June, 3% growth, growing that customer deposit side. And as I mentioned earlier, you're not going to see that level of growth on the investment side as given the environment and the high interest rate environment and the reduced spread. With the reduction in interest rates that the Feds would have signaled, we expect that recovery on the investment business line, but we're not going to continue to ramp that up, but more look at opportunistic trading and look at growing the non-core side of our balance sheet and focus on having that sustainable earnings going forward for the long term. In closing, just want to reiterate the strong capital base and the strong foundation that the JMMB Group currently stand on. Our capital in excess of 50 billion, all the respective entities, regulative entities within the group currently exceeding its capital ratios. So I think we have a good foundation. We are looking forward with the recent shift in the interest rate environment to improve results from the group going forward. Before I hand over, that's my 2 cents, Chairman. What we will do, I think, at this time is have a brief video in terms of the company, the various respective countries' performance, Trinidad and the Dominican Republic and Barbados and Jamaica.
Greetings, shareholders, board members, and distinguished guests. My name is Juan Jose Melo, and I am the Chief Country Officer for Dominican Republic. It is my pleasure to share a summary of our performance for the past financial year. The economic landscape in the Dominican Republic was shaped by high interest rates and low liquidity as part of a restrictive monetary policy from our central bank, given the post-pandemic inflationary concerns. These conditions impacted our business in several ways. Rising inflation led to higher operational costs, requiring us to optimize our expenditure and business model. The combination of high interest rates and low liquidity led to a significant increase in our cost of funds, putting pressure in NII across all businesses. Despite these challenges, we were able to navigate the market effectively thanks to our strategic focus, resilient business model, and diversified financial solutions. The off-balance sheet businesses and our trading capabilities allowed us to withstand the pressure and post excellent results. Our gains on securities traded grew 74%. Our FX business grew 82%, and our net profit grew 14% for a 1.1 billion net profit result. I am proud to highlight 3 strategic achievements that were pivotal in driving our success this year. We successfully launched our internet banking platform, which includes mobile banking, enhancing client experience by offering seamless on-the-go banking services. We successfully transitioned into a commercial bank, and we achieved a 3rd place on the Great Place to Work survey. These achievements have positioned us well for sustainable growth and enhanced client satisfaction. Looking ahead, the economic forecast for the Dominican Republic suggests a gradual improvements in the conditions such as GDP growth, inflationary pressures, and interest rates. In response, we have identified 3 strategic priorities that will guide our efforts in the new year. Accelerating our digital transformation journey to ensure we meet the evolving needs of our clients while maintaining operational efficiency. Expanding our optimal funding mix by attracting more affordable deposits to fund growth. Rolling out capital markets, enhancing our client-centric approach by further embedding our integrated service model and improving client engagement to foster long-term relationships. These priorities are aligned with our vision to become the financial partners of choice in the Dominican Republic and to drive growth and value for our stakeholders.
Greetings to our shareholders, board members, and distinguished guests. My name is Sean Moses, and I'm the country head for JMMB in Trinidad and Tobago, commonly referred to as TNT. It is my pleasure to share a summary of JMMB's performance in TNT for the past financial year. In doing so, I'll briefly touch on the economic conditions we faced, our achievements, and our priorities for the new financial year. The economic landscape in Trinidad and Tobago over the last financial year showed some positive indicators, including GDP growth, controlled inflation, and a reduction in unemployment. While the repo rate in TNT remained unchanged, interest rates paid on TT deposits did increase during the period. In the banking sector specifically, regulatory changes such as the introduction of the capital conservation buffer and the liquidity coverage ratio requirements have impacted how we operate in this highly competitive environment. During the last financial year, JMMB Bank and JMMB Express Finance focused on segments which maximize returns. Our investment entity faced challenges due to the interest rate environment, which impacted asset prices. Our local equity market also reflected lower volumes, which also impacted this business line. All entities in TNT paid close attention to their expense lines to ensure efficient operations. I am pleased to say that JMMB TNT was able to navigate these market conditions effectively to maximize our overall country profit. Some key achievements when we look at our year-over-year performance include a 4% increase in total revenue, 12% increase in net interest income, 8% growth in FX income, 8% improvement in operating efficiency, record high net profits generated by both JMMB Bank and JMMB Express Finance, improvements in all our client engagement scores, and I am also delighted to report that the JMMB TT entities contributed 15% towards our group's gross operating revenue. I am proud to highlight the following achievements that were pivotal in driving our success this year. We introduced innovative lending solutions, most of which were first to market in the industry and achieved successful client adoption. We increased brand awareness significantly with strategic marketing efforts across the JMMB TNT group. We recognize our people through the execution of various high-impact team member engagement initiatives across the organization. We believe that these initiatives allowed us to deliver strong country results for the last financial year and has created a solid foundation for sustainable growth and client satisfaction for years to come. Looking ahead, the economic forecast for TNT suggests further GDP growth in 2024. Inflation is expected to remain low, and liquidity in the foreign exchange market is expected to remain tight. Based on these indicators, we will be focusing on the following priorities for fiscal 2024-2025. We will be improving our client access by expanding our branch network with new locations for both JMMB Bank and JMMB Express Finance. This expansion will focus on an integrated approach and leverage digital solutions which will improve the client experience. We will continue to focus on smart growth and client access through the introduction of new products and services with emphasis on technology to offer additional convenience. We will continue to focus on managing our expenses so that we improve our efficiency while ensuring that we do not sacrifice the client and team member experience. We also commit to promoting financial inclusion by offering services to the underserved segments of the market. These are a few of our priorities which are aligned to our vision at JMMB to be the financial partner of choice in Trinidad and Tobago and aim to drive sustainable growth and enhance value for all of our stakeholders and the wider community. Thank you.
A warm JMMB welcome to all our shareholders, board members, distinguished guests, and my JMMB family. My name is Keisha Forbes Ellis, Chief Country Officer for JMMB Jamaica. It is my pleasure to share a summary of Jamaica's performance for the past financial year. I will briefly touch on the economic conditions we faced, our financial contribution, our strategic achievements, and our priorities for the 24-25 financial year. The economic landscape in Jamaica for the last financial year was shaped by continued headwinds from the pandemic as inflationary pressures continued to affect the global economy. In response, the restrictive monetary policies by central banks around the world resulted in elevated interest rates, which adversely impacted financial markets, specifically funding costs and trading activities. While the last rate increase by the Bank of Jamaica was November 2022, tight market liquidity kept rates high. However, frequent interventions by the central bank in the foreign currency market resulted in stable FX rates with modest point-to-point depreciation of the Jamaican dollar. Notably, lower domestic demand resulted in a deceleration in inflation, which trended down to the target range. These conditions impacted our business in several ways. Firstly, given rising global interest rates, margin compression continued, and with the Bank of Jamaica continuing to tighten market liquidity, there were further increases in our cost of funds. This resulted in a decline in our net interest income. In addition, given the BOJ's frequent intervention in the FX market to address supply-demand imbalances, there was exchange rate stability. This resulted in smaller spreads and lower FX trading gains. Finally, while there was some success in managing inflation locally, cost of living was still impacted, resulting in lower disposable income, thus affecting retail and business activity. Global inflation would also have contributed to the dip in our total remittance inflows for the period. Despite these challenges, we were able to navigate the market effectively, thanks to our strategic focus and resilient business model. Our strategic pillars of client partnership, operational efficiency, and productivity, as well as a strong focus on our people, smart growth, and the efficient use of our capital, led to the achievement of credible results. The Jamaican entity's contribution to group operating revenue was $12.6 billion, which was 2% lower than the prior period, primarily due to the decline in the NII and FX trading gains, given the high interest rate environment and a tight monetary policy stance. Despite this, Total funds under management for the investment management segment was stable at $376 billion. Notably, there was a 5% increase in off-balance sheet FUM, which grew to $152 billion. Consequently, fees from managed funds increased by 18% to $1.69 billion. This performance is demonstrative of a strong partnership maintained as the team successfully supported clients in meeting their financial goals. While the macroeconomic environment resulted in the underperformance of regional equity markets, JMMB Securities remained the broker of choice, receiving 5 awards at the Jamaica Stock Exchange Best Practices Awards. Additionally, the banking segment delivered a strong performance, with NII up by 19% due to growth in the loan portfolio, which was up to $126 billion, ranking JMMB as the 4th largest commercial bank in loans. The loan growth was funded largely by a 13% increase in the bank's deposit base, which totaled $141.2 billion. For our remittance business line, operating revenue was down to $465 million, given reduced inflows and the exit of one of our main international partners. However, revenue improved by 22% for our insurance brokerage team, reflecting growth in commission and fees. This growth was largely attributable to the team's focus on partnership, service quality, and convenience, which resulted in very high retention rates. As country head, I am proud to highlight 3 strategic achievements that were pivotal in driving our success in 23-24's financial year. Firstly, we continued to broaden our digital channels, which resulted in enhanced client accessibility while maintaining cost efficiency. Our digital assistant, Joanna, was launched in July 2023 to improve customer service, followed by our Moneyline mobile app in October. We also introduced our Moneyline IPO portal for non-JMMB clients, allowing them to take part in public offerings of stocks and preference shares. Secondly, we expanded our suite of solutions in line with our value proposition of partnering with clients at every step of their financial journey. The JMMB Money Transfer Visa Prepaid Card was launched in July 2023. This card allows clients to receive remittances from over 150 countries with access to their funds within minutes 24/7, without the need for in-person assistance. Lastly, we continued the integration of our country client segments, which allows JMMB Jamaica to maintain strong client partnerships. Our priority was to provide our clients with accurate and timely information, especially in times of increased global uncertainty, and deliver the one JMMB experience whilst spotlighting the diverse financial solutions in JMMB's suite of offerings. These achievements have positioned us well for sustainable growth and enhanced client satisfaction. Looking ahead, macroeconomic conditions are expected to improve as rate cuts are anticipated in the US and have already come to fruition locally. While optimistic, we remain vigilant in risk identification and mitigation. Our focus is on integrating our suite of financial solutions and delivering value to our clients while maximizing efficiency and convenience. We have identified 3 strategic priorities that will guide our efforts this year. The first is improving operational efficiency. We will continue to drive the principles of the Maximizing Profitability and Productivity project, which has significantly boosted efficiency since November 2023 and aided in the advancement of our managed smart growth strategy, strengthened financial stability, and restored our profitability. Additionally, we will leverage the group's strategic cost management framework that ensures optimal resource allocation to satisfy the operating needs of the business and to drive growth. We will also focus on structure optimization through standardization and centralization. The team will continue the execution of digital transformation initiatives with the goal of making more solutions available digitally via a simple, seamless, and integrated interface. We have recently launched the Hello Future microsite, which is a holistic financial planning tool focused on retirement, providing financial resources to guide users through retirement planning. JMMB Jamaica operations also have successfully implemented a digital onboarding tool, allowing persons to open accounts online. These projects are expected to significantly enhance client experience across channels, while yielding efficiencies for the entities across the Jamaican operations. Finally, we will continue the integration of our sales team to better deliver our value proposition of providing holistic financial solutions across all client segments. We will also continue to capitalize on market opportunities consistent with our clients' financial life goals while ensuring the maximization of their risk-adjusted returns. These priorities are aligned with our vision to be the financial partner of choice in Jamaica and to drive continued growth and value for our stakeholders.
Thank you very much. You've heard about our operations, but there is a part of us that really we are always proud of, because you have to take care of your environment, even though you're going through tough times, even when you're going through tough times. And our Joan Duncan Foundation really keeps us grounded and ensure that we take care of our environment. And I have the pleasure of asking Mrs. Kim Mayer to come and make her presentation. And she's so committed that she has left her celebrations for her 29th wedding anniversary to now do the presentation.
He's watching, so happy anniversary, honey. Okay, yes, it works. Wonderful. Good afternoon, JMMB family. Can I get a bigger afternoon than that? Okay, you're awake. Wonderful. I stand here today with immense joy as we reflect on the remarkable achievements of the JMMB Joan Duncan Foundation over the past year. Guided by JMMB's core values of love, openness, honesty, integrity, and care, we have continued our unwavering commitment to nation building and the empowerment of our people. This year, we have made significant strides, investing $172 million in the areas of education, entrepreneurship, environmental sustainability, and I'm honored to give you a few highlights of these accomplishments because they have told me that I have limited time. In education, our initiatives have sought to create equitable opportunities for all, exemplifying our belief in the transformative power of learning. Through our support of Follow the Trail, Invest in Braille, in partnership with the Digital Foundation, we provided 5 additional Braille machines to the Salvation Army School for the Blind. This investment of $765,000 is more than just a contribution. It is an affirmation of our commitment to inclusion, enabling the visually impaired students to access quality education and pursue their greatness. In recognition of the often overlooked issue of food insecurity among tertiary students, we donated $1 million to the Grace Kennedy Campus Connect Food Bank. By doing so, we have helped over 250 students meet their basic nutritional needs, ensuring that no student's educational journey is compromised by hunger. Additionally, our scholarships and bursaries, along with our Life Accelerator program, have continued to support students from high school to university, equipping future generations to contribute to a prosperous society. Last academic year, we supported 97 remarkable students, an investment of almost $13 million. For entrepreneurship, that remains at the heart of our mission, and this year we reinforced our support of budding entrepreneurs. In partnership with educational institutions such as the Joan Duncan School of Entrepreneurship, Ethics and Leadership, which we call JDCL at UTEC, they have been instrumental in nurturing the entrepreneurial spirit amongst Jamaicans' youth. Conversations for Greatness was integrated into JDCL's curriculum by being included as part of the entrepreneurial behavioral course. This exposure will broaden the mindset of our future business leaders, instilling in them tools not only to dream big, but to realize those dreams in a manner that benefits society as a whole. We are equally as proud of our major entrepreneurial competitions, including the UE Vincent Hosang Venture Capital Competition and Junior Achievement, their Marketing Mavens competition, by encouraging young entrepreneurs to embed, and I had corporate social responsibility, but it is not corporate social responsibility, it is social responsibility into their business ventures that we are helping to foster a new generation of businesses that are mindful of their impact on the community and the environment. And speaking of the environment, here we go. Our dedication to conservation and sustainability has been steadfast. Once again, we partnered with the Port Royal Marine Lab and their Biodiversity Center to participate in International Coastal Cleanup Day. And in fact, just Saturday, we again participated. We had 2 teams, and we are waiting to hear how many pounds of garbage we cleared. Our team members' efforts to rid the coast of man-made debris reflect our belief that preserving the natural environment and our natural resources is fundamental to our vision of an abundant society. It's not clicking along with me. There we go. Conversations for Greatness has remained a cornerstone of our community transformational efforts. Through CFG, we have empowered individuals to adopt a possibility-thinking mindset, enabling them to manifest their potential and make a lasting impact on their communities. This approach has proven transformative not only in schools, but in our collaborative initiatives with community organizations and specifically through Project STAR, which is now working in 4 parishes: Kingston, Clarendon, Westmoreland, and St. James. CFG has impacted nearly 1,973 individuals alone, contributing to a more prosperous and positive society. As we look back on this year's achievements, we are filled with a deep sense of gratitude and hope. I thank the dedicated members of the board, our board chair Tricia, Audrey, Vinty, Douglas, Gifford, who's at the back of the room, Burchell, Jadine, and Trudy for their oversight and guidance. And I recognize my phenomenal team who produced these amazing results: Marlene, Chevroy, Nadine, Shadiomar, Gabby, Celia, and Ronique, who are all online watching. Our journey is far from over. And as we continue to support and build our society, we remain committed to transforming lives and communities. The impact of our work in education, entrepreneurship, and the environment is a testament to the power of love and service. And in the words of Joan Duncan, I would like to contribute to the good of all the persons with whom I come in contact. I will do so by focusing on and endeavoring to realize the good for all persons concerned, which can be derived from every situation with which I am presented. JMMB family, we thank you for your unwavering support, and together let us continue to realize the vision of greatness for all. Thank you.
Okay, thanks, Kim. Now it's your turn. There's questions that you have actually pent up that you want to do. And just to say that we will have 2 roving microphones. There were some questions that have been sent in. Carrie Ann will take us through a couple of them later on. And what you need to do is put your hands up so that I can see. And I think Kerry is standing by Mr. Staple, who has his first question. And please remember, we are doing this is being broadcast, so you could state your name and ask the question.
Thank you, Chair. So Mr. Staple's hand was the first hand that went up, just to be clear.
And
Good
remember,
morning,
Mr. Staple, 2 questions.
How are you? Good to see you.
Mr. Chair.
Yes, sir.
Or it's Staple. If you turn me to page 4 of the Auditor's report.
Page 4.
Of the Auditor's report.
Yes.
On a key audit matter. The use of judgments and assumptions increases the risk of material misstatement and is therefore an area of increased audit focus. Why?
Could you repeat the question? Page 4.
The use of judgments and assumptions increases the risk of material misstatement and is therefore an area of increased audit focus. Why?
Okay. Just to simplify it, things like audit depreciation. We make estimates make a judgment as to say the useful life of an asset. So that is a judgment. That is a simple example of what judgment calls for, and that is the reason why. Yeah, Patrick?
So am I correct in saying that that's the reason for your judgments and assumptions?
Come again?
Am I correct in saying that this is the correct, this is why you do your judgments and assumptions?
Yeah, every company has to make.
Yeah. Mr. Staple, what they're saying is that because the auditors are saying because it requires significant judgment, then they increase their level of audit focus in relation to the particular matter. The matter you're referring to is the ECL provisioning on the portfolio, on the loans and investments. And because their judgment requires or estimates, then the auditors are saying they're increasing their audit work, the level of audit work around it. That's what it's effectively saying.
Mr. Chair.
Yes, sir.
I further believe that the introduction of low interest rates is going to create more problems for the ECL. Am I correct?
I wouldn't think so, but Patrick? No.
No, so lower interest rates, Mr. Staple, it has 2 impacts. One, it reduces the cost of borrowing for our clients, so clients can borrow at a lower rate. That's one. And 2, in terms of our portfolio, it improves your spread because once interest rates come down, cost of funds on our portfolio also reprices as well. So it benefits us long term. So it will improve borrowing going forward.
Mr. Chair, as far as I'm concerned, and this is a personal view, interest rates are going to create more problems for the people of this country. In that, they're going to borrow, and later on when payments are due, they're not going to be able to do it. And all what is going to happen is that it's going to impact on the profit and loss because they're not able to pay back. That money is going to stay there uncollected.
No, but what Patrick has said is that when interest rates go down,
yes,
the chances of customers paying back their loans have increased.
Because the interest rates are going to go back up. There's no doubt about that. It's going to go back up.
No.
So therefore, when it starts to go back up, you're not going to be able to pay.
No.
And because you're not able to pay, they are going to take that money and put it into expenses.
Yeah.
And that expense is going to impact on your profitability.
Duly noted, sir. Your concern is duly noted, Sir Staple. I mean, the long term of interest rate going back up, that is something that can happen.
It's not going to take long. Within the next 2 years, interest rates are going to go back up.
We hope not.
We hope not, but it's going to happen. Watch my word.
All right.
People of my age have seen better days than what is happening now. Better days.
All right.
We have seen better days.
Yeah.
Schools.
Okay.
You know, like in churches, we have seen better days.
All right. I'll talk to the people at Bank of Jamaica that you said it.
It's going to be worse off, Mr. Chair.
Okay.
Interest rates low. Interest rates are going to create more problems for our people in this country and in the world at large. More problems. Mr. Chair, turn me to page 9 of your consolidated report. Mr. Chair.
Yes, sir.
Interest rates. We earned $4 million interest rates. And that $4 million cost us $7 million to make. Explain something to me. What is happening here?
No.
We earn interest of approximately $4 billion, $4 million. And that $4 million cost us approximately $7 million. What is the foolishness about this?
No, can you show us that figures? I'm not seeing that.
We are fooling ourselves, Mr. Chair.
No. What page are you referring to, Mr.
Page
Staple?
9 of your...
You're referring to the net interest income?
Yes.
Yes, so that's just a feature of the cost. I mean, the cost of borrowing would have gone up. Keith did a very detailed presentation on that. So the liability side of your portfolio, your interest costs would have increased with the increase in interest rates. So your spread would have reduced, which is the high interest rate environment you were just referring to, Sir Staple. So yes, the NII on our spread on the portfolio would have reduced. So the asset side on your portfolio wouldn't reprice as fast as the liability side. So therefore, you would see that reduction in your interest rates, and that is what you're seeing there in your numbers.
Mr. Chair, we are fooling our older people. We are fooling ourselves. And in fooling ourselves, we are using these numbers as a means of saying to other people,
No.
this is what you earn.
No, Mr. Staple, we don't fool anyone. We actually record transactions. The auditors come in and verify that the numbers that we record are in fact those that we actually incurred. So we don't fool people.
Mr. Chair, the auditors are no better because they are charging $60 million. And in order to get that $60 million, they have to be your friends.
No, Sir Staple, we don't do things like that. So I respect.
What do you mean nothing like that?
Yeah. All right. We'll now ask our second person because you asked your two, so we'll come back around if there are other persons.
There's a question back here.
There's a question. Yes.
And then one over there.
Pleasant good morning. My name is Lanzel Bloomfield, shareholder.
Good morning.
First question. Mr. Chairman, can an investor invest in immediate annuity with this company?
No, we don't have an annuity. We don't have an annuity product. We don't have an annuity product.
That would be more
insurance
based.
Okay. Mr. Chairman, please explain in layman terms the interest rate as announced by the BOG. How does it affect the banks vis-a-vis the individual banking with the institution?
Wow. How does it affect the banks versus the individual banks? Is Jerome here?
Versus the individual banking with the institution.
Jerome, you want to do that?
Okay, so Jerome Smalling, CEO, JMMB Bank, will take the response to that question.
Okay, could you repeat for clarity?
Could you explain in layman's terms the interest rate as announced by the BOG? How does it affect the banks vis-a-vis the individual banking with the institution?
Okay, so it will have a dual effect in terms of depositors will not be as happy, because what it means is that the interest rate on deposits will potentially go down. As far as it is the borrowers are concerned, the borrowers are happier because the borrowers will now be able to access funding at a lower rate. Typically, when this action occurs as well, there's an increase in liquidity in the market, which means, again, for borrowers, we have more liquidity available to fund the businesses and to fund growth. So while depositors will be receiving lower interest rates, what it does as well, it triggers or drives alternate investment opportunities. So your stock market, your bond market, and other markets will become more vibrant, and then you'll have that opportunity to reinvest your funding and to get, good returns on your money.
Thank you for that, but as a follow-up to what you have explained, the increased liquidity in the market, will it affect the foreign exchange rate?
Well, I notice you said will. I'm not going to predict, but typically there is a relationship between the availability of liquidity and the exchange rate. However, in recent times, we've noted a level of maturity in the Jamaican market, and typically demand for US dollars remains within the confines of real demand, meaning to pay external debts or to purchase supplies versus the hoarding and speculation. So we've seen over the past 4 or 5 years where Jamaican market is far more mature in terms, and speculation is lower than it was. So I'm not going to predict, but I wouldn't expect people to rush to hoarding US dollars and driving the rate out of the reach of the Jamaican public.
Thank you very much for that.
Thank you.
Thank you.
Nicole, you had someone on that side with a question as well. Thank you.
Thank you, Mr. Chairman.
Yeah.
Allow me to...
Please state your name.
Mary and Devon Dick. I'd like to say thanks for the meaningful prayer and the inspirational selection. 2 questions. No, you're allowed 2 questions?
Yes, sir.
Asset tax.
Yes.
So you said that the associations signed off on the arrangement with the government. I'd like to know how will these associations ensure the reduction?
Wow.
To go back to the original arrangement. And
Please.
The second one is the CFO said that the net operating revenue was 22.4 or 5 billion.
22.3. Yeah.
But in the book here it says 22.3. Please explain that difference.
It's
22.4. Yeah, 22.4. The other income.
Yes, I'm just asking to explain the difference because the CFO had said.
So the operating revenue, if you look on page 9, the operating revenue net of interest expenses is 22.3, and the total revenue is 22.4. It's on page 9 of your report.
I saw that, Mr. CFO, but in the front of your book here, it says net operating revenue 22.3B. So that's what I was asking.
Right, the 22.3 is referring to the operating revenue net of interest expense. So there's a other income of 162 million, which it excluded that.
Yeah. The question regarding the asset tax, Keith.
First of all, I received my copy of your book, Preaching in Jamaican Seasons. Thank you very much for that complimentary copy. And thank you very much for your service to Jamaica, sir. You know what I mean? You continue to be a strong advocate, and we need more of that. So you can help me advocate for asset tax, right? So I am hoping now that you will now work with me and Jerome Small in the banker and the insurance people and the Security Dealers Association to see how we are able to get across to the government that this asset tax is regressive, it's distortionary, and it does not work for the Jamaican economy. So so therefore they have to take off the political lens to understand that this is about the economy. And it's about delivering the value to our shareholders. The shareholders have taken the risk, and rather than us having distributable dividends, we have to pay this asset tax, and it's not on profits also. So I believe there has been, Jerome, you would say there are people that there's continuing dialogue, and one of the reasons why I put it here today, along with the strong urging of Donna Kay, was to ensure that we publicly advocate for this, for the removal of the asset tax, right? I think the associations and the private sector bodies will have to continue to do so, but I think it's almost like a political hot potato, because when the needs of the country are so great, and then you're asking a politician in an election year to remove the asset tax on banks and financial institutions, you know that's a tough sell for a politician, right? However, they need to do what is right, because it is right for the economy, and how we need to position it to them is the best thing for the economy, to reduce the cost of intermediation, to be able to get your shareholders the returns that they deserve. So we're going to continue the advocacy.
And the point is well made, that it is not out of the profits that you earn. So whether you make a profit or loss, you have to pay that tax. So it is coming out of capital at times, which we can't pay dividends out of capital, but we can pay dividend. The government is charging us. So your point is really well made, and we need to get it across, not because it's a financial institution. It is really an unreasonable tax.
Thank you, Chair. Question here.
Mic check.
Yeah. Could you state your name?
Go ahead.
Yeah, Livingston Young.
Oh, yes.
I'm going to big up Mr. Duncan, because he look like he's a man of God just like me, because I realize him have knowledge. I respect you for that, Mr. Duncan. Anyway, Mr. Kifley use or something, we hear that talk about sale. Back in the days, when Jamaica dollar go buy cents, just like the US dollars, we just do downtown, them just do export like yam, banana, and all sort of things. So we just trade with the US dollar hard, and we just see our money are profitable in the Bank of Jamaica. I don't know what, because maybe if I'm not dealing with God, our no growth. Because our dollar value less than 3 cents. So big up, Mr. Say you try hard, but so under pressure. Because other people not join Mr. Duncan. So Mr. Say God with you, you try hard. It's not that you're not trying, you try, but some other do them just a pressure down the system because them say God with you, and you try. Them don't want to try with you. So big up Mr. Duncan. All right.
Thank you, sir.
It's not a joking thing, it's a real thing, man. It's a real thing. All right, you can turn to page 32, note D. This is in US. Basic points. Note I are somewhere about I, yeah. Etiquette price. Changing in basic price. Minus 100, 2023. Plus 100, 2023. The points now, the group, 50,888,000. You could have explained to me 2023, 2024 and 2023, please.
What page are you? What page?
Page 85, note 32, D, risk.
85.
Credit risk, yeah. Changing basic points.
Okay, understood. Well, what that is, That's a sensitivity analysis. And what that is doing is taking your portfolio at the financial year end and saying, if the prices change by, there are general guidelines. First of all, there are general guidelines that are published by the respective institute. And it said if you take your portfolio and these prices are shift by 6% or respective percent, then this is the impact it will have on your income statement and on your capital. That's a general gist. Because as you know, when you invest in equities, the prices change on a daily basis. People trade, the stocks trade on the market daily, and the prices move up and down, right? And what you're basically trying to give you, the shareholders, a view says, if the prices move by this percentage range, this is what the impact will be. That's what it's basically trying to tell you.
You can turn to page 39, note 21, property, plant, and equipment. Descriptions, March 31st. You can jump down to 2022, deferred tax. Deferred tax. You jump down at the bottom part of the group. You there? There, Mr. Chairman?
Yes.
It just written.
You can give an explanation on 2024 and 2023. With deferred tax, 18,093,100 odd. You can understand the bracket.
Okay, so what happens here is that for tax purposes, your tax is calculated on what is called a receipt basis, and accounting, you do your accounting on an accrual basis. So what this is saying, in the future, if you look on page 22, it gives you the breakup of the taxes that are basically deferred. So you have your tax losses, you have your investment portfolio, you have interest costs that is payable, foreign exchange losses, and what that is saying, in the future, we are going to get an additional benefit in terms of taxes that we are going to apply to the group whenever you receive it, because the tax authority calculate the tax on a receipt basis, but for accounting purposes, you do it on an accrual basis. And going forward, it is saying we have this benefit in the future that we'll realize at some point in time.
Okay.
Mr.
No, Mr. Livingston.
Yeah, one more.
No, man.
Just one more. This one more.
Questions,
This one vital. That's one more.
Questions, sir.
Let's hold on, man.
No.
Mr. Chairman.
No. Mr. Livingston.
Once a while, we'll come and meet Mr. Chairman. Just hold on.
No, Mr. Livingston. When somebody else complete their two, we come around again. Let us play by the rules, man.
Yes, please. Everyone has to get a chance.
We play by the rules.
Mr. Chair, we have David Rose here with David Rose, shareholder, here with questions too.
Morning, everybody.
Morning, David.
So, first question is with respect to the repricing of assets, as you mentioned earlier.
No, we're not hearing you clearly.
The repricing of assets with reduction in interest rates. So, as it currently stands, you've seen money market rates such as for BOJ CDs come down from about 10% to 7% following the August reduction by the BOJ. I know that JMMB Group has $10.36 billion in pref share maturities for March. The first part of the question is, are you looking to potentially extend those preference share maturities?
Okay, handing the mic to Mr. Paul Gray, Chief Investment Officer.
Hi, David. Thank you for that question. Preference shares form a part of our capital structure, and as such, we always monitor our capital needs in the future. The one for March that you referenced, yes, we'll be looking to roll over that preference share. In terms of the characteristics of that preference share, we'll await, closer to the period to determine what the market will obtain and will take, and we'll definitely look to make a decision at that point in time.
Thanks. And the second part is to Mr. Ellis as the CFO. So, so most of JMMB's external debt is held between the group, JMMB Group Limited, and JMMB Investment, which is a subsidiary. most of the debt is currently relatively priced between 26, 27 at around 10 basis points and above. Is it that there's going to be a slow reduction in JMMB's interest income rates relative to interest expense until that time comes for repricing?
Yeah, so it's two things, right? On the group side, David, you know this as well as I do. It won't reprice as fast on the group side as much as because those are fixed rate debt. On the investment side of our portfolio, like the repo book, we have already seen the positive effect of that. If you look on the Q1, for example, you see the NII is positive. So that is coming off. On the banking side as well, we expect positive changes in the short term. So to answer your question in a nutshell, overall, we do expect positive impact from the reduction in interest rate, but it won't be as faster in the investment book, but not as fast as on the group book, on the group side of our balance sheet.
No, two questions. We do the second
David,
round, if anything. Two.
We'll
be consistent. So
there's a question here at the back, and then lady in red. Thank you.
Good afternoon, everyone.
Good afternoon.
I'm Anatole Clark, Allwood shareholder. Mr. Chairman,
yes.
I crave your indulgence. I missed quite a bit of what was going on because there was so much chatter in this section. And I really believe that if we respect one another, we try to listen to one another or move away and have a conversation. So my craving your indulgence is
you usually are
limiting
upfront.
This to just 2 questions, is that it? That's
Yes.
not the resolution, Mr.
No,
Mr.
just
Mr.
2
Chairman.
questions just now, yeah.
Okay, and they're related to what? Just the finance?
No, you asked 2 questions.
All
this
right.
is an open section.
Thank you. Well, actually, I have 1 question and some recommendations.
Okay, thanks.
My question is, what will likely be the impact of BRICS on this economy?
BRICS.
Brazil,
No.
yeah?
We, at this point
Russia,
in time...
India,
Yeah.
China, South America.
Yeah, but at this point in time, we don't see an immediate impact because, it's too early for us to start putting that into our matrix to see how it is impacting, because it's currently still talk, and but we are watching.
All right,
Our
thank you.
people are watching.
So let me quickly tell you what my concern and recommendation is. I have watched JMMB grow, and I feel part of the family.
And we see you as part of the family.
Thank you, sir. But I am finding a trend, and it's not just in JMMB, where the quality of communication is falling. I don't know what you may be able to put in place to facilitate an improvement in that. So that's one. The other is the level of indiscipline that I experience in the parking that's in the near what used to be Island Life area. There are persons actually who work in this company that move in the wrong way. And I'm wondering if it is that we drive on the left in this country, but we are required to enter on the right in the parking area. And it's not just the workers. There are persons who come to do business, and I watch the poor security trying to get them to follow the big, large arrows that are there. I don't know what can be done about that.
Okay.
Again, it's a reflection of the indiscipline in this society. Okay. Sir, the minutes did not record the responses to the questions by shareholders. And so my recommendation is that we record the responses that are given to questions. Thank you. That's it.
Thank you.
Our company secretary has taken that note, and we'll deal with it. with regard to the parking lot over by the Island Life building, she's correct. When we go in, we turn right and we drive on the left. So let us see. We look at it, but and hopefully, but the security should be there guiding the people. So we note it, and we will have someone deal with it. Thanks, Mrs. Scott.
Thank you. One question over here, then we're back on that side of the room.
Afternoon, everyone. Gay Clunis is my name. I'm a shareholder. I must commend the company. Commend you, Mr. Keith, and your sister and the team for what you have been doing. I know it's a great challenge because we see what's actually happening now. It's not just Jamaica, it's the entire world. But I must commend you, especially when you start that you acknowledge God. Because when we acknowledge Him, as the word says, He will direct our path. And no matter what you see JMMB or the other entities are going through, when you acknowledge God, He's going to see you through. It's not going to be an easy road, because a lot of people are now telling you in investment, they decide that they think they're going to go back and save under their mattress because it's so distressing what's happening in the whole financial industry. But I really thank God that you have come to the point, over the years I've been a part of JMMB, and you're always acknowledging God. I thank God even for the prayer that you prayed. Because when we ask God for His direction, He will take us through. He took the children of Israel through the Red Sea, and there's nothing that God is impossible with God. And I really thank you all for really acknowledging Him, because it makes a great difference. I thank Mr. Keith in regard to the asset tax, because I think when he presented, wasn't this asset tax, it was not for a period, wasn't it for some time? I didn't know it was something to go on and on and on.
Agreed.
Was it that it was for a period?
Yes, it was.
So why is it now that it is now that it's, what can be done now or what is being done? Because it came in as to be done as a period, it was for this time. And now because of what's taking place with the government, it's just going on and on and on. So we need to get answers. We need to get answers because it started out on a period, and now we need to see what is really going to happen. Because many of the shareholders or even investors might not be here with us today. Some of them might be online.
Agreed.
But as Mr. Staples said, it's affecting all of us.
That is true.
But what I really thank God for is that when we put God first, He'll take us through. God bless you all in Jesus' name.
Thank you very much.
Thank you very much.
Arthur Edison. Do you care to say, Chairman, what percentage of our assets are they Sagicor Holdings?
23%, Patrick.
23% of Sagicor, perhaps, not 23%.
No, our ownership is 23.62. The total amount that we own is 44. At March, it was 44 billion of a total asset pool of 680. So it's about 19, 20, thereabouts.
Yeah, to what extent does that affect JMMB's profits roughly?
It is a significant contribution to our profitability. When you look at March, from a core perspective, annualize 4 to 5 billion, and then you get one-offs. We got the one-off this year of about 16 billion.
So you say that whatever changes happen in JMMB's situation affects us significantly?
In SFCs.
Sorry,
you mean in SFC? Yes, it does.
And is there any way that we can balance that off by perhaps your vertex plans or anything like that?
No, so in terms, there are two aspects.
Yes.
Their core on an annual basis is very consistent. In my presentation, I would have highlighted that for the quarter, their core was about 25 million US profits. What happened in our Q1, which is their Q2, is that because of the IFRS 17, they had a mark-to-market adjustment on their portfolio, which is relatively new to the market because the standard was adopted the 3rd January in 2023. So it's a fairly new standard. And what they're effectively doing is matching the assets and liabilities of an insurance company and taking into account discount rates and all of that, right? So I think it's something that they're working through. They understand the volatility. It's not something, ideally it should match.
Yes.
And I think they're working that through. And I think before the end of the calendar year, we should know where we are. And I think hopefully that will be a positive.
I expect all of us will be looking forward to any kind of positive developing in that situation as being good influence on our stock, whose price, as we recognize, has deteriorated significantly.
Yes. Well, I guess with the reduction in interest rates, people there would have been a shift, people locking into the high interest rates in terms of CDs and other fixed income securities. With interest rates coming off and reducing, you could see that shift into the stock markets and more uptick in terms of the market. That is something that we would expect.
No. And of course,
no,
the price of your stock is a function of your dividends.
Yeah.
Let's look forward to those dividends, Chairman.
Agreed. And I think you have the commitment from the CEO and the board that dividends will always be part of our plans for the future.
Thank you, sir.
Yeah.
Another question here?
Yeah. That's Mr. Ellison. Say hi to Carol.
Good afternoon, everyone. My name is Beverly Malcolm Montague, a shareholder of JMMB. Now, Mrs. Ellis, your country manager, during her presentation, she spoke to operational efficiency at the branch level, as well as delivery of client satisfaction. My question is, why does it take so long to process a loan request when it is presented with all the relevant information? Wow. Given that other institutions do take a shorter period of time, and I'm speaking about up to 6 weeks for a loan request to be processed. Thank you.
Wow. Jerome, you know of that? Jerome, can you answer that? That seems unusual.
Okay, Nick. Jerome is getting the microphone.
Thanks for your question. We've been working through the process, but understand as well, there's no excuse for it. But different applications will have different nuances that will result in different time periods. So I'm not sure if it is a business type facility that you're referring to, or a retail or personal loan. So it would be dependent on the complexities of that specific situation. However, as our country head would have indicated, in driving towards our digitization, we launched a new loan processing system which will assist us in that. It will assist us, one, in arriving at decisions quicker, and two, giving leadership the opportunity to manage and monitor applications. So we are now in a position to monitor how long an application is taking, and from the top of the house, we'll be able to push it along to ensure that we're delivering the right service to our clients. So I apologize for that. I think we're among the faster processors of loans, but we're even getting faster.
Thank you, Jerome. There's a question here, Chair.
Yes.
Good afternoon. My name is Yvonne Henry. I'm a shareholder.
Could you repeat the name?
Yvonne Henry.
Okay.
Yvonne Henry. Yes, I'm a shareholder. I've been with JMMB before the first initial share issue.
Yeah.
And I'm still here. And I am
Thank
proud
you.
of JMMB as a Jamaica.
Please allow Ms. Henry to...
As a Jamaican, I am proud of the company. It has grown phenomenal. And I am really glad that I did, because I said I was before they started issuing share. I was investing with them from then, and I'm still here. And I am very proud of the group. Although I grumble sometimes because before the share issue went out, when you go in the office, it used to be so nice. And you feel like family when you went in there. Now, with the growth, it seemed like, the staff get a bit aloof and they're not really paying much attention to people. And I think even like older folks, when we go in there, they should really pay much attention and try to see what they can do to get you out faster. Okay.
Thank you. New Kingston, that's on Knutsford Boulevard. Thank you for that feedback.
Yeah. The head of culture, Donna Duncan Scott, will say something on this.
Okay. Yes. Thank you very much for that feedback. And I think it's, our shareholders have been really good at holding us to account. And so I think we'll have to come back with a very good answer next year in terms of what we're going to do better to serve our, more mature clients. So thank you for that feedback, and we take it. All right?
Thank you very much, Donna. Another question?
Okay.
Good morning, all shareholders of JMMB.
Please give us your name.
I'm shareholder Dwight Jackson. Just like to say your JMMB platform in terms of the money line, I think it needs to be upgraded you're doing buying stocks online, right? Sometime what do I want to say? All right, what do I want to say? You're buying stock. The platform want to edit, meaning that if you, I don't want to, I'm a bit shy, you got to see it. Right, for instance, good until fill. Yeah, I want to say good until fill. Your platform only go to 1 month. You can't go until fill. It's only 1 month you can go until.
Okay.
And again, on the platform to be edited, instead of you have to cancel and go over, it will take time and other entity can go and get the stock before you're buying or selling. So it will keep up enough time. So, I don't know if this is the venue for it, but I would like that to be done on your platform.
All right. Gifford?
I'm sorry for the
delay.
Thank you, sir, for that feedback. Gifford Rankin, or General Manager, Digital Services, is going to respond.
Good afternoon, shareholders. Good afternoon, executive team. Thank you for your great suggestion. The team is actually working on the edit feature, so you will get some information on when that will be available, because we're working it for both Jamaica and Trinidad. So you should see that shortly. In terms of good until filled, I think we'll have to take that under advisement, because that means your order could be out there for a long time, and then folks, not everyone is as savvy to remember that they have this order sitting and waiting and may cause some issues when they're looking at the funds available. But we'll take it under consideration. Thank you.
Okay, thanks, Gifford.
Thank you. There's another question over there, and then we take one here.
Good afternoon. My name is Ashton White. I'm shareholder.
Ashton
White.
White. Okay.
On page 9 of the financial report, it's a question that 24 over 23, your revenue grew by less than 3%. What is the plan to increase your revenue growth?
Well, so I think if you look at where we would have been impacted when you look at our revenues, it's on our net interest income and our gains on securities trading. I think our CEO did an excellent presentation of highlighting the high interest rates would have impacted your net interest income. with interest rates coming down, that is going to move in a positive direction. We also mentioned focusing on our core in terms of smart growth, non-interest income activities in growing that. So you're talking about your funds under management, you're talking about your FX, your other cap markets activities. So we are looking with the market and the freeing up of reduction in interest rates and market liquidity improving, you're going to see, we would expect to see a positive trend in our non-interest income. It was 33% at March, and we are looking to move that to around 37 to 40%. But that's not going to happen overnight. It's going to happen over time because the value in terms of your non-interest income is not going to catch up to your NII in the short term, but over the long-term period, you will see that percentage increasing in a positive manner. And as I said, with a reduction in interest rate, you will see improved spreads on your NII, your net interest income, which you saw that in your Q1, where year over year, your NII was positive. The growth in the NII was positive.
Okay.
Thank you. We have a question here.
All right. It's now.
Good afternoon, everyone.
Good afternoon.
Lorna I. Smith, shareholder. By listening to the news, I hear that tourism is making so much money, and yet the foreign exchange keep going up. American dollar keep going up. So I'm saying, are there any plans for the JMMB group of companies to get make investment in that sector? Because it seems like it's the only thing running the country now. People come here and they make a lot of money and send it back to their country. So I'm wondering, why is it that we Jamaicans can own a piece of the pie and enjoy some of it?
Thank you.
Well, Jerome, you want to speak of the banking services that we offer to tourists? Yeah.
Thank you, Chairman. Thanks for your question. I believe she was asking specifically whether or not JMMB would be investing in the tourism sector. From our perspective, JMMB is always looking at good opportunities to invest to the extent that we can give a good return to our shareholders. I don't believe we have any such investments on the horizon. However, from a support perspective, we've been funding the sector through our bank and through our cap markets for some time. So in terms of actually investing in running hotels, so to speak, I don't believe that is on our horizon right now. So Chairman and myself, we've been around a long time, and we are aware of times when financial institutions veered from their core business or what they are experts at into other segments, and it did not work out as well as anticipated. So I think for now we will stick to our core understanding, which is financial services provision.
Yeah.
Thank you.
And when the CEO spoke of diversification, what he was speaking of is that we have invested in overseas so that we are not only affected by what happens in Jamaica, but we get the benefits of some of those overseas income.
Thank you.
Thanks.
Question
All right.
over here, Chair.
It's now 12 minutes past. We have been at it for near 50 minutes, so we'll take about 2 more questions before we go into the resolution.
Thank you, Chair.
Good afternoon. Darren Dixon, shareholder. Mr. Duncan hit me with a nightmare a while ago. But first one, 2 things. The Knutsford Boulevard ATM, I went inside there, I noticed the display screen doesn't tell me US dollars or Jamaican dollars. So your card goes in and you see a number come up, but you don't know what currency it is. I don't know if you can address that ABM, that's Knutsford Boulevard office. I don't know, it's probably the other ATMs around, but that one I noticed. And now to the nightmare.
1 minute. Gifford, some of the machines. You know.
If I understood you right, you put in your card, right?
Yes. Yes, you put in the card and you don't know if it's US or Jamaican. You see a number. Obviously, you're going to withdraw a deposit, but it doesn't state anything. So you just press and then you go along. So what I'd like to see is it I'm doing a Jamaican transaction, am I doing a US transaction? I don't see a differentiation. If you could work on that.
This is on the Knutsford Boulevard ATM.
Right beside that main office, Knutsford Boulevard.
Right. So the ATM, once you put it in, you're going to enter your personal identification number. Then you choose the type of deposit. I believe if you choose now quick deposit, which always goes to what we call your default account, which is always Jamaican, as Jamaican is a primary currency. But if you choose withdrawal, it's going to ask you the type of account, if you want to use Jamaican or US, and then the currency will be represented as you go along.
Well, I'm going to look carefully again because I didn't see all of that, what you
No
just
worries.
said.
No worries. I'm here. We can take you through. Don't worry about it. All right?
All right, no problem.
Thank you, sir. And you had another question?
Yes, my fellow shareholders, the nightmare. Mr. Duncan, I am distressed. $1,100 million for the first quarter to this government?
Yes.
This is ridiculous. If you have gone over 6,500 million from 2013, I'm going to subtract and say 5,400 million has been given before this 2024 year. Yeah. If 1.1 billion, I'm going to billion now, my shareholders, that is 4 quarters in any year. Let us multiply it by 4. If that's 1.1 billion times 4, for 1 year. Am I getting it correct?
The 1.1 billion, while you pay it in the first quarter, it is for the entire year, but it's payable upfront, yes.
All right. So you're paying 1.1 billion for 1 year.
Yes.
What is it going to be for 25? What's it going to be for 26? This nonsense can't continue. I'd like to borrow some money from JMMB, and my problem is, will I be in a position to do it if I'm paying tax to a government? When I walk on the sidewalk, it's like the potholes in the road. I have to be treacherously diverting and maneuvering myself. I don't know if I'm getting value. Matter of fact, I am not getting value for money. And I cannot pay to a government that is not assisting me in any form or shape. Shareholders, we need to wake up. Thank you.
Thank you very much, Mr. Dixon. All right, so we're coming.
I think everyone has asked a question, Chair. We have some other folks who wanted to go a second round. So
And that is one question now for the second round. One question each.
Could we?
No, I think Mr. Livingston was, and then one for Mr. Rose.
Yeah, Mr. Chairman, I see the ask. I tell you, to make 4.1 billion.
One question, Mr. Livingston. Yes.
All right, forgot about that one. Go turn to page 49, note 28. Note I, profit. Yeah, profit and loss, related party transaction. The group, you see directors, interest income, interest expense, other expense. No, 2024, interest income at 26 million, interest expense 250 million 640. Other, what made up is others are 1,323,000 2024. In the subsidiaries.
What's the question, sir?
Explain, the question asks, what made up this other income of 1,332,000?
Other income. Come here.
Go ahead, Patrick. I think it's open.
Yeah, so this is where the directors invest with the group. So they have placed funds and invested in the group. And the returns in terms of if they have invested, you would get the interest income. If they have borrowed, there would be interest expense. And this is reflective of any equity transactions in terms of the other income. Any other transaction, it would be rolled up there.
Mm-hmm. No. No, those are managed funds. So when they have monies in the various funds. All right?
Okay.
So by statutory declaration, you have to, if any transactions that with the group has to be disclosed as required by the auditing standards.
Yeah.
Thank you.
All right. Thanks,
Thank you.
Mr.
Just
Livingston.
one question here from David, and then Chair, I'm going to ask for one question from Mr. Staple to wrap.
Just, okay. One question.
So I'm going to rush to one basically. So earlier this year, the chairman would have, well, not chairman, the CEO would have mentioned the plan to consolidate JMMB Securities Limited and JMMB Investments in, sorry, JMMB Securities Limited and JMMB Fund Managers Limited into JMMB Investments. Correct. What's the status on that? And also, would JMMB consider selling the Nike One debt to other funds like Bass Point?
We can't speak of individual claims.
All right. So on the consolidation, we are awaiting regulatory approval. It has been submitted, and we are awaiting regulatory approval for that. Next, second question.
No. That was one question.
No,
Mr. Staple.
that was one. But we'll answer the
Mr.
other one
Mr. Staple, one question.
after the event is finished. If there are any questions, actually, that anyone wants to ask,
no, this is
we make
1 hour
ourselves
question.
available at the end, of course.
One last question, because we are now 1 hour into questions. Yeah.
Mr. Chair.
Yeah.
Or it's Staple.
One question, Mr. Staple.
Yes. Turn me to page 34.
This is the financial statements, Mr. Staple.
Yes. Page 34. What accounts for this $4 billion company, Jamaica Money Market Brokers, Trinidad and Tobago Limited? What is that money for?
You're referring to 2023?
Yes.
So there would, if you look in the note
And
one.
It's not in 2024.
Yeah, 24 is 0.
Yes.
So in the current year, we would have done, if you look in the note 1 in the financial statements, the group did a reorganization of the group, and so all the regulated entities fall under what is called the Jamaica, the Financial Holding Company, JMMB Financial Holdings Limited. So that's just moving the entities out of the Trinidad parent company and the DR parent company out of the group and reflecting it under the Financial Holding Company.
So where is it right now?
It's still it falls under JMMB Financial Holdings Limited. And if you go to
That's
note
Jamaica?
1, the explanation is there in note 1.
Answer me, yes or no?
Yes.
All right, thanks. Mr.
Thank
Staple.
you, Mr. Staple. Thank you,
you.
Chair. Back over to you.
All right, ladies and gentlemen, we thank you. We have spent an hour on questions, and we thank you for all the comments. We will always be responding to your needs. We now move on to the resolutions. And I'll basically be asking a member who is present to move each resolution, and we second it. And the first one, Resolution 1, the reports of the directors and auditors and the audited accounts for the year ended March 31, 2024, circulated with a notice convening the meeting, be adopted. Will please state your name? Yeah. David Rose, moved, seconded by Arthur Ellison. Okay. Those in favor? I say, please raise your hands as the secretary has to count. Raise your hands, all shareholders, those in favor. Have we got all of those? Yeah. Right. Put those down now, and those against. We haven't seen any against, so therefore we'll have 30 seconds to include those who voted online. So the results will come shortly. 30 seconds. How is the ECJ coming? Or is the Electoral Commission? Okay, 142 for, none against, and 1 abstained. Okay, thank you. Resolution 2. The following resolution, that the interim dividends of 25 cents paid on October 9, 2023, and 25 cents paid on August 12, 2024, making a total of 50 cents for the year under review, be and are hereby ratified and declared as final, and that no further dividend be paid in respect of the year just under review. I now ask a shareholder, I think David Rose, to move, and seconded by Karen Borland. Karen Borland. Boland, B-O-L-A-N-D. Thanks. Karen Boland, second. So therefore, we'll now ask for those in favor. Hands in the air. Have you got it all? Okay. Those against? Those against? All right. He's against. So 1 against, yes. All right. And Dennis. I now pass this over to Mr. Dennis Harris.
Good afternoon.
Okay, first, the results. 146 for, 3 against, and 4 abstained. That's resolution 2. And for resolution 3,
The director is retiring from office by rotation. I'll probably ask Dennis to read this part and deal with the first one.
Okay, Resolution 3A, since the chairman can't really propose his own reappointment, I'm going to do that. And Resolution 3A says that Dr. Archibald Campbell be and is hereby re-elected a director of the company. So I'm just going to ask someone to propose. I see David there. Who's? You can second first. Right? I see David has already proposed. Okay, and he proposed. Second, okay. Can we now have the vote, please? By the show of hands, for. Have we now completed the counting? All right. Okay, done. All right, and those against? Is that hand still up, or is it? Oh, okay. None against. Thank you very much. I'll now hand back to our re-elected chair.
No, we have to wait on the results. Okay. Okay. So, Dennis, read it. One.
Yeah, read the number. Oh, yes, 157 against 0, and 1 person abstaining.
Okay.
Thank you very much.
And thank you, shareholders. All right. Thanks, Arthur. Okay, I now ask a shareholder to propose the following, that Mr. Andrew Cockin be and is hereby re-elected a director of the company. Can someone move? Miss Clooney, Mrs. Clooney, Clunis, yes. Seconded by, state your name? Delroy Bryan, okay. We now have all in favor. Raise your hands. Yeah. Keep them up. Okay, we are now down. Okay. Those against? Okay, over to you, Madam Secretary. Okay, we have 158 for, none against, none abstain, and the resolution is carried. Welcome back, Mr. Cockin. Resolution 3C. Is Mrs. Clark here? Anyway. That Mrs. Donna Duncan Scott be and is hereby re-elected the director of the company. Ask that a resolution that someone move. Mr. Samuel seconded. Yeah. All right. All in favor? Okay, you have it. Those against? None. Over to you, Carolyn. $148 for, 0 against, 0 abstain. Thank you. Welcome back, Donna D. All right. The fourth resolution. I now propose that someone asks a shareholder, that a shareholder propose the following resolution, that Mr. Dennis Harris be and is hereby re-elected a director of the company. Can I have someone moving? Beverly Lawrence, and seconded by Raquel Codner. All in favor? Oh, you have numbers? Okay. Those against? You know, some of the people who had their hands up, I'm not allowing 2 votes. Those against? None. Over to you, electoral officer. Come stand up, man. Come stand up, because make people see you. Oh. The results, 147 for, 1 against, 1 abstention. So the vote is carried. And welcome back, Dennis. And during, okay, resolution 4, that the election of a director other than retiring. During the year, we had one director who was at, can you come and let us see? In accordance with Article 108 of the Articles of Incorporation, the following director, having been appointed during the year, retires and is eligible for re-election. Director Narisha Davis Parkinson, having been appointed during the year, be and is hereby elected a director of the company. Can someone move? Yes, Mrs. Clark Collard. And seconded? Ms. Codner again. All right. Yeah. All in favor? Yeah, man. You can. You can vote too now. Okay. All right. You can put your hands down now. Those against? Over to the Electoral Commission. Okay, the resolution is carried, 142 for, 1 against, 3 abstentions. Thank you. Yes, Narisha, you're here of your own accord. Okay, resolution 5, that KPMG Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be fixed by the directors of the company. And I ask a shareholder to move the resolution. Bacardi.
Oh, Anela McFarlane. And seconded? I saw your hands up. Can you say your name? You had your hands up. The seconded. Dennis Edmondson. Okay. All in favor? Okay. Have the numbers? Okay, down. Those against? Not seeing any. Over to you, Electoral Commission. (144) for, 1 abstention. Resolution number 6. I know that the amount included in the audited accounts of the company for the year ended March 31, 2024, as remuneration for the services as directors be and is hereby approved. Can I have someone moving? Thanks. Mark? Martin and Barton, and seconded by David. Okay, those in favor? Okay. Have you completed a count? Yeah. Those against? Okay. 147 for and 2 abstentions. Resolution is carried. Ladies and gentlemen, as we close, I would like to extend our gratitude to all who made this event a success. Our valued shareholders for coming out even with the rain. Clients, team members, auditors, registrars, attorneys, media personnel, and fellow directors, I thank you. Over the years, you, our shareholders and clients, have made this organization an exemplar in the financial industry. You have stuck with us through it all. You continue to keep us on our toes, and we expect to be better. Thank you. This has been an informative meeting, and we owe a debt of gratitude to the entire JMMB Group team for ensuring the smooth execution of the AGM. Special thanks to Keith and the team. As usual, you have given a very informative presentation. The presentations and details shared with us today have certainly been instructive and useful. It is our hope that you have gained more insight into the group's affairs. It would be remiss if I did not extend a special thanks to Susan Hendricks. Where she is? She's always up and down. Susan Hendricks. Stephanie Log Lawrence. Carrie Ann Stimson. Jessica Chung, Sophia Houslin, Chantel Spike, Sean King Ferguson,
Cadian Johnson, Claudine Tracy, Marie D'Souza, Ayana Duncanson, and Carolyn Da Costa, who all worked on the annual report. A special thank you to Sharon Prendergast and her team for the KPMG Compliance and Regulatory Unit, Mark White and his team from Visual Tech JA, Michael Kelly and M Squared, Deck Events, Luna Ideation, the Pegasus Hotel, and their team who supported us in executing our shareholding meeting. Once again, I thank you for your attention. Oh Lord, how could I find, where's Jason? We thank you for the rain. I can't sing. So Jason, for your singing. And we thank you again for your attendance. Please continue to be of good support to the JMMB team. We have arranged lunch for you, and you may collect on the outside. See you next year. I ask that you enjoy the rest of the day. Thank you.
Thank you, Chairman. Well, excuse me, we're going to play some videos for you from Project Star. Just for if you guys would like to see, grab your lunch, and if you want to watch some videos, it's a national, social, and economic project.
This evening, we are in the community of Rose Gardens to have the Rose Gardens Community Transformation Action Plan Validation Session.
The community vision was discussed. There were a number of issues raised around things that should have been added or subtracted. We tried to put together something that reflected the consensus from amongst the community.
As the name transformation connotates, it's a change plan for the community. It highlights the priority issues or the developmental challenges of the community, as well as the interventions or programs that must be put in place over the next 3 to 4 years to really address the root causes of these issues and in order to lead to positive change within this community.
And if it don't look good, we can, look back at the recipe, look at what the ingredients we are putting, and we can add a touch of that. Your ideas now, you have to speak out. It's your community, and everything is going to benefit you.
It also speaks to the partners that must be engaged for this plan to be a reality. Validation speaks to accuracy and ensuring that there is buy-in and ownership. And so that is what is happening here. We've engaged the different stakeholders within the community, representatives from our schools, our churches, our community-based organizations, and they're all here to speak to the fact that the document is a true representation of what they want to see in their community over the next few years, and also their commitment to being a part of the change process, to collaborating and working together. After today's meeting, the document, the actions, the interventions will be implemented with the partnership of all the stakeholders being on board.
Why we planted or sowed our money in this venture is because we believe in the power of education. We know the long established saying that if you give a man a fish, you help him for a day. If you want to teach somebody to fish for a lifetime, make an investment in that thing between their two ears, that's their brain. When you put that thing in there, nobody can take it out. And especially we're in a relatively low income area, the big engine that will get kids out of this low income into the dizzy heights of financial freedom and them being able to give back to their communities is their education. Finally, you're looking at a proud product of the inner city who is able to get to maybe dizzy heights on the back of education.
Today we're in Rose Gardens for Labor Day.
And why are we here? Because we believe in community upliftment and development.
We are clean up today because we love our community and we want our community to come back.
Why I really take up on this job of doing this? Because I wanted the whole community to look more beautiful and look clean.
We all have to contribute. It's a community effort. We can't do it alone.
Now our objective is to start the process by beautifying the space, welcoming people back to the space, and working with partners like JCF to sustain the peace, and Carreras and other corporate sponsors to ensure that resources are being inputted into the center to give people more access to the resources that they need. So over time, this place will be buzzing again with people, buzzing again with life as it should.
We are in the community of Rose Gardens to have the Rose Gardens Community Transformation Action Plan Validation Session.
The community vision.
This morning I woke up and I looked in the mirror and every part of my body was in place. Many people died and never saw this day. So another day I live, I appreciate. Don't ever wanna act too high and mighty, cause tomorrow I can fall down on my face. So in everything, Lord, I give you praise, and that puts a smile on my face. Lord, I thank you for sunshine, thank you for rain, thank you for joy, thank you for pain. It's a beautiful day.